guys, good morning, welcome to the live session of Stocks Number Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hi everyone, welcome to Stocks Number Trading. My name is Ron, my partner is Dave. Welcome guys, thank you for joining. First off, can everyone hear me on Zoom? And everyone, can you guys hear me on YouTube? We had some issues yesterday. Is everything resolved? Can you guys hear me? See the charts, everything is good? Please guys let me know. Thank you guys. Okay, welcome guys, welcome. Okay, how is everyone doing, guys? Sorry, I'm a little excited about just finished the Euro Cup game with Albania and Croatia. I was at the Croatian club with all of my buddies. I left at the 70th minute when Albania was up 1-0. I thought we had it, and then as soon as I leave, I saw 1-1, then 2-1, and then I just got home and just saw they just tied it up. And wow, what a game, guys! So hats off to Croatia. They are an amazing team, and you got to give it up for little Albania coming in there and making something in the group of death. So welcome, guys. I hope everyone's having a great day. Yesterday, apologize, YouTube. I'm sorry, guys. We had some issues with the OBS, the audio. We had to reboot the entire thing and download it again and got it started, but we're all good. Thanks for joining, guys, and everyone on Zoom. I appreciate all of you guys. You guys are having a fantastic day. Thank you guys for joining. Welcome Russell, Steve, welcome Forex Borex, my man. Thank you for joining. I appreciate you, everything you do for Stocks Number Trading, guys. Everyone on Zoom, give it up for Forex Borex. You know, constantly in the gold channel, giving his charts and everything like that. I appreciate everything you do, Brandon. Thank you so much. Welcome, guys. Akashi, welcome. Mo Humble, welcome, brother. How are you? And everyone on YouTube, thank you guys for joining as well. Appreciate all of you guys. Pablo, thank you, bro. I hope you guys enjoyed that game. We got Germany and Hungary in another hour, and then Switzerland and Scotland at 3 o'clock coming up. Monday night, guys, I'm gonna be in Germany for the Albania-Spain game. Spain is a powerhouse. I can't see us beating Spain, but it's gonna be a good atmosphere there. I'm going to Europe for six and a half weeks for my vacation down there. I'll be taking my laptop with me wherever I find some Wi-Fi in the different countries I go to. I'll go to a nice little cafe, and we can stream from there and we can have some fun. It'll be like times we'll see down there because I got a lot going on. I gotta visit a lot of family and a lot of things to do, but just please, guys, on YouTube, hit the notifications button so that when I do go live in Europe, then you can join us. And you guys as well on Zoom, I'll let you guys know once I get there and I get settled in, then I'll let you guys know the times and everything like that. So Forex Borex, where am I heading? All over. So first into Germany for 3 days. I'll be going to the Monday night game, and then from there we fly into Macedonia. I got some family down there. And then from Macedonia, we go to southern Albania for a couple weeks at the beaches down there. I have a villa over there, Brandon. And then we're close to Greece too, the Corfu Islands. We're going to go there for a little bit. Then we go to Kosovo, where my wife is from, spend some time there. Then we go to Montenegro. I'm going to go to Casino Royale down there, where they filmed that James Bond movie down there, and play a little high stakes poker down there. And then from there back to Albania. Then we're going to fly to Turkey for the remaining 2 weeks, and then come back to Canada. So it's gonna be exciting, guys. I'm pumped about it, and I haven't packed. I haven't done anything, so I got a lot of errands to do this week, guys. So we'll go through our calls together, but I can't stay here all day because I got a lot of things to do. I told the wife I did packing. I haven't even started nothing. So let's keep that a secret between us. Yesterday, guys, on YouTube, I am sorry, but we continued our call on Zoom after when we couldn't get YouTube working. This was a setup we took yesterday on gold. I bought this green candle right over here at around noon. And placed my stop loss below this green box down in here, and our target was, I was targeting this white line 23.31, but this was the full target to come up to the bottom of that red box. So it was a total about 47 pips if you guys held up to there. But you really have to respect this red box up there, because that's when the big shooting star candle came down from there. And then it came all the way, retraced all the way back down. So you can see how these zones can continue to play in effect into the future. If you figure your zones and then you stretch it across, and then it kind of wicked out of here 2 times and then bounced right back up there. Like, you could have scalped this little move right here. And then we're going to go into, then it just came back and started to consolidate right back in this range. We're going to see how the markets are moving today. US banks are closed for June 18th. So if you guys celebrate that, I wish you all the best on that. It's African history and everything like that. So please, guys, learn about it, what it is, what it means, and everything like that. So, but the US banks are closed today, so volume is a little bit low today. We'll take a look at gold. We'll do a full top-down analysis and everything like that. Okay, so but first thing, when we get started, we're gonna go through the news real quick. So there's not too much in news today, and also in earnings it's a really light day. So maybe we'll look at going into tomorrow, what to expect on Thursday. And over here I have Bookmap. This is the live depth of market. I have it on gold, so you can see it's kind of just ranging right around this VWAP. There is a little bit of a heat down here on the bid side accumulating, and then there's also a big offer of liquidity up here. So cumulative volume delta currently is negative 345 for gold, and it's on the 15-minute time slices. So you can see over here 10:15, 10:30, 10:45. We just started our call here at 11, and then you'll see 11:15 showing up real soon. Okay. So before we get started, does anyone have any questions? Philip, do I stop by in Germany? Yes, I'm flying right into Frankfurt and then going to Dortmund for the game Monday night. I have my aunt that lives down there, so I'll be visiting for a little bit and then flying out of there after 3 days. So yeah, we'll be in Germany. Okay, guys, so let's start off with Forex Factory. So Wednesday, June 19th, we had a little bit of a red folder come out in London, GBP. CPI year over year, it came flat. So from the forecast, what they were forecasting a little bit lower from the previous CPI year over year this month last year, 2%, 2.0, and the actual came out 2.0. And then there was 1, 2, 3, 4, 5 total GBP folders pre-London at 2 a.m. Red folder specific, high impact one. So if you were trading in London, there was probably a little bit of volatility here with the pound if you were trading. And as we continue to move in at 5, look at the time, how specific it is. 5:36 a.m. Eastern, we had a German 30-year bond auction. So if you were following that, maybe that impacted if you're trading DAX, which is German 30, German 40, the index over there, or any European currency was maybe impacted by something over here with the 30-year bond auction in Germany. And we have an all day. This is what I was just talking about. You guys already know. You guys have been in the markets already. There's a bank holiday in the US today. So again, you should have a little bit of a trading plan when you see US bank holidays. Should you be leveraging? Should you be going hard today? Should you be taking a little bit easy and then maybe following the market moves on a higher time frame to see how everything develops for tomorrow when the US banks open up? That's the way I go about business. That's the way how I do it. If I see a US bank holiday, sometimes I take the day off. Like I'm telling you guys the honest truth. If it wasn't to be with you guys right now, I still would have been at Klub Zagreb right now, and the Croatians wanted to start drinking ouzo from 8 in the morning. Like I would probably be there right now with them, not drinking, but I'd probably have a smoke with them. They got the soccer ball out and they were right in the fields right after the game. So we were gonna have a little friendly game between Albanians and Croatians there too. So I would see that there's a U.S. bank holiday. I'd stay out there and have some fun with them, and take the day off. But I know that you guys are more important than that, so we got to get into here. But just going forward, guys, make sure you know if there is a US bank holiday, take it easy in the markets. You don't need to do much. Number one, there's not a lot of volume in the markets. Number two, there might be the spreads are a little bit unusually larger for your securities you trade here. Some of your orders may not get filled where you want. There might be slippage and things like that. Okay, and continuing to move forward this afternoon, we have Bank of Canada summary of deliberations right here at 1:30, a little meeting, and then we move into the Tokyo, Sydney, Australia sessions. Not much going on today. Even earnings, it's real light today. Like we only had one pre-market 7 a.m. I think there's nothing in after hours. Yeah, there's nothing in the after hours. So we move into tomorrow morning. Pre-market, pre-New York, starts to get a little bit busier. The U.S. banks are back open. We've got some earnings, Accenture, Limited, Kroger, Aurora Cannabis. If you guys are interested in the cannabis sector over here, I know I'm very familiar with this sector. Have traded these companies for multiple years over here. So if you guys have any questions about the cannabis industry, you guys can. We'll do private like webinars coming up soon. I'm gonna break down sectors with you guys. You guys tell me what you guys are interested in, and we'll start breaking down the different securities and things like that. I know these securities pretty good. I've been part of these for a long time. But you do have to be very, very careful with this type of industry over here. It is very volatile. They do a lot of reverse stock splits. They do dilute the shareholders. So they kind of had their run back in the day here in Canada, and they might be cooking a little bit. They might be warming up a little bit in the U.S. if U.S. federally legalizes. So I would, if you're interested in the cannabis industry, I would put a few of these on your watch list. Specifically, Canopy Growth, which is in Canada, it's weed. Money $ WEED, and in US it's CGC, Canopy Growth Corporation, and that's the big one. So if you're interested in those, okay. So I just want to see the earnings, what they release tomorrow morning. Negative again, they're not making any money. Earnings 51 million is pretty sad for this sector. Government kind of killed this entire sector over here. And then after hours, okay, tomorrow, Smith and Wesson brand. Some of you guys are familiar with this. They make some really nice, beautiful handguns and pieces over here. Some of you guys own a Smith. Does anyone own a Smith and Wesson? Really nice pieces over here. And then we got Algoma Steel Group. After hours. Okay, so not much going on. And then just going through our Discord over here, guys, real quick. We send out Discord signals. There was a really nice one on buy gold at 23.10, 23.12 yesterday, right before 10 a.m. So we're looking for buys above 23.10, 12. Again, it comes down into that nice little pocket of liquidity. Come in there, nice V recovery, come out of there. So pick up all the bids, come back up, start to close above the area, and start to move up for over 150 pips if you held that. Nice runner. And then SST Scalper Pros producing over here. Sell gold right over here. Again, we're looking below here, 23.28. Again, it pushes down. We get a body that closes. Then look at the candle, how it opens. It's an ignited green candle right away. So when you see it's ignited green, you give the benefit of doubt that it's going to come up to maybe retest 50% or the break, and then it closed above. So it's kind of like a false signal, false entry, and then it came right back into that pocket, and then there's your big FU candle. They reject it down, they come back down again and close it below, and then creates a new lower low. So if you're still following, like I'm fascinated with following the candles, I follow the volume, but you got to see what they're doing. So you got to put the pieces of the puzzle together. Then it comes back up again. You know, we've seen this yesterday. I was going up 15 pips in the gold trade. It would come back down to break even. It would put me me and draw down another 10, 15 pips, it would go back up to break even, go back into profit, come back down. But I held it, I held it, I held it, and then it started to break out for the 20, 30, 40, 50 pips. But sometimes you got to allow trades to develop unless you're not micro scalping the markets. Unless you're, if it's different if you're trading individual candles and you're in and out, or two candles and you're making your move. But if you're trying to allow things to develop, you got to read what's happening. Again, it came back up. That was a big green candle, and then they rejected it, lower high there, continued to push it right back down, and then we start to make our way back down, and then there's the big flush coming down, and then we want to see maybe it will pull back into here, and then maybe they push it right back down and things like that. So if you guys are following the SST Scalper Pro, I hope it is helping with your trading, with the charts and the trade management and everything like that. Okay. Now let's continue to move forward, guys. Everyone on YouTube, this is the free Telegram channel. If you guys can subscribe to this, 1 second, I can pin it at the top of the YouTube. Just give me 1 moment. I believe I forgot to do that. I was just rushing over here from the Croatian club. How's everyone's Euros? You guys, who's your team? Who are you guys cheering for in the Euros? Okay, YouTube. Pinned at the top of YouTube now is the free Telegram. Okay, sorry I didn't put that earlier, but it's there now. So if you want to join it, football is not your thing. It's all good. It's not for everybody. Do we trade Asian session, Cheng? Yes, we do. We do like 2 weeks in New York, 2 weeks in the Tokyo session, 2 weeks New York, 2 weeks Tokyo, back and forth. We do a lot of education more in the Tokyo session, and then we do a little bit more trading in New York. But yes, we do that. Okay, guys. So just continuing going forward. Pinned at the top of the YouTube is this Telegram channel. So we show you what we do in here. This was Dave this morning, killing it over here. Nice sell right over here. Zoom is doing well. You can see here, guys, smashed. Effing love you, Dave. Perfect, beautiful sell. So guys, if you guys are catching some pips, let's start accumulating, start developing your trading plan, start thinking, looking forward guidance. You know how markets do some forward guidance? You should be doing some forward guidance too about your plan and everything going forward. If you're starting now to put the pieces of the puzzle together and you're starting to understand your trading strategy, your trading plan, your risk management. Number one, risk management is everything in trading. If you're starting to understand that, you're hitting your daily goals, you're getting more and more disciplined every single day, then you're starting to realize what it takes to be a trader. So just keep it up. Improve from all your mistakes. We all, including myself, including Dave, including everybody here, everybody needs to improve their mistakes. We make mistakes daily in the markets, okay? So everybody can make some room for fixing those things. Always be hungry in the markets, but always be humble too. So yes, sometimes you're going to make a wrong decision, but with proper risk management, you can gain your losses back. If you over leverage and you're using absolutely no type of risk management, you're making it more and more difficult for yourself to recover, and then you're going to make trading that much more difficult. Peter Horvath, you're hungry? Yeah, the tough game against Germany. We'll see what happens. Yep, Shahab is a beast in London. Yep, shout outs to Shahab too. Yep, guys, great. Okay, so let's now, I'm on XAU USD. I don't want to waste any more time. We're going to do a top-down analysis, starting with the higher time frames. We're going to look at daily, hourly, then bring it down to the 5 minutes. I do have it on Bookmap over here. Okay, so you can see there's not much movement right now, but we'll take a look at how it moves going into this afternoon. So let's start off with the daily. We did this yesterday, but for all the YouTubers that are coming in, let's do it all over again. So What I did yesterday was, okay, so first off, let's just identify two big zones that are sticking out like a sore thumb. Number one, this zone down here of support right there. It was support in April, it was support in May, it was support in June, and I'm going to bring it into the future because it could be support going into the future. We're trading right up here now at 23.25. This zone down here is about just under 2300, so 2290 all the way down to maybe 2280. So it is a zone down there, whatever you want to call it. Okay, I don't want to debate now what we're going to call this. Some people call it a support. If you want to call it support, it's support. If you want to call it demand, you can call it demand. If you want to call it a green box, call it a green box. If you want to call it Mickey Mouse, call it Mickey Mouse. Okay, just understand that the buyers are in there. Every time the volume comes down here, it looks like it's getting rejected back out. Every time it comes back down, it looks like it's getting rejected back out. So it is developing some type of support and demand in there. Okay, and we can say the same thing too for the opposite side. Where's the supply? Okay, you guys should all know, if you're trading gold, on Monday, May 20th, that hit the all-time high, 2450 exactly. Nice psychological tap right at 2450. I can start my big zone, red zone, at 2450, but I want to get more like where there's more touches. If I just started at 2450, I only get that one touch up there. But over here, I like this previous all-time high at 2430, and then I bring it down to that wick. I get into the heart of those bodies right in here, this one, this one, this one, and then that's where I'm going to start my red zone above and make it red, okay, because the volume is below. So I want to identify that this is an area. Again, what you want to call it, that's up to you. Some traders call this resistance. If you want to call it resistance, let's call it resistance. Some traders will call it supply zone. If you want to call it supply, you can call it supply. But just understand, for supply to be like a definition of supply is if you have multiple rejections at resistance, like right here, it got rejected. That one time is resistance. 2 times, again, it's resistance. But then if we start to get 3 times, 4 times, 5 times, then it starts to develop into an area of supply. So more times it gets rejected at resistance will turn into a supply zone. But I don't want you guys just get caught up on the names, but understand more so what type of reaction will happen here, what we're looking for. So I can identify that as a supply. I know that the all-time high was an impulse breakout to the all-time high. Did it close above there? No. Did it close the next day? No, it came back down, and then they pushed it right back down. Have we came up? Our next push was right here. This big red candle was Friday, June 7th. This was NFP Friday. So there was that's it. That was our high right there at 2388. So I can see it's well below all of this structure. It's below the all-time high. So they did push it down on NFP, and we are retracing our way back up slowly. 1, 2, 3, 4, 5, 6, 7, 8 days now. We're on 8 days of trading, and we're retracing right back up to about 50% of the NFP volume. They might very well just bring this right back down, and then we might test again down into our support demand box. Maybe we consolidate. Maybe they break it out a little higher, and then we start to trade into maybe 3/4 up here, 23.56. Okay, but now what I do is, maybe there is some other zones to look at. This is more of a higher time frame, like a monthly zone up here. This is more of a higher time frame, but we do have structure that's being built right in here. So now what I'm going to do is I'm going to zoom in more on the big red NFP candle, this one right here. So I can see exactly where there is some point of interest on the daily right here. There was support right here, support right here, support here, support here, support here, support here, and support here. I can draw just a line right here, just to watch this area right there. I'm going to put a yellow line right here. Okay. So the reason why I put a yellow line at around 23.26, 23.25 is because if I just look, these 2 big red bars that came down, that's it. They stopped right there. Then green came into the market, came back up. and then we came right back down again to this point of interest. Then it got rejected. We came back down, we broke it, but it closed right at the yellow line. The next day again, we came back down, but we opened right at the yellow line, came down, but then the volume closed above here. Then we came back down the next day, broke it, and then we closed again at the yellow line. Then the next day, an ignited bullish daily candle formed at the yellow line. Then here, kind of this was a green candle that impulsively broke out, but then it closed right at the yellow line. Here we opened next day red at the yellow line and pushed down. Here we actually closed above the yellow line, so we should have got a green bar to break out that short wick. But if you understand your price action technical is what we teach here, it's an ignited bearish bar, so we assume it's red and it pushed down. So it didn't even take out that little tiny wick at the top, so it was a bearish day coming all the way back down. But when we came back down, it came back up again. Next day, yesterday, we came down, so I can see it's building a little bit of support at 23.08. It came back up, and look, again, it closed by that yellow line, and now we're just hanging around right at this yellow line. So it is a point of interest. This is a very important area on the daily questions over here. Okay, and now I look at the big candle right over here on NFP, and are we trade? If I look at where we opened and where we close, half of the volume is like right here. So I can see 23.40, that's where we came up to, and they rejected it right there. So that's an important area. So when I'm looking at an area of like a red zone, I would maybe make my red zone like right here. I use my yellow line as the reference point, and then I bring it right up to that previous high, and then it is pretty much exactly 50% of that big red NFP candle. So we traded into it on Wednesday, June 12. We came in bullish, and then they pushed it right back down. We closed in the red box, but we couldn't get any momentum to break out of here. So you see right now, today's daily candle, we're trading right in this red box. So even if you're not trading, it's very, very important to watch where today's daily candle is going to close in the next 5.5 hours. Is it going to close back down red down here? And then maybe tomorrow gold is going to continue to maybe push down a little bit down into here and test these lows, or it might start to officially break out of here going forward the rest of this week. Okay, so now what I do, if we're gonna kind of scalp the markets or look for some zones, anything, what type of zone do we have above us? For example, if we're gonna come through here and break through here, where could we possibly go? Will it come all the way up to that big monthly box? There is a little structure right here, and there's more structure like right over here in the market and here. So then what I look for is maybe if they do break it out, maybe we trade up to 2360 around here. And then why am I looking at 2360? Because this is where I tend to look for touches, data. The more data we can get, I'm going to place a yellow line somewhere around here as a point of interest. So I'm going to place it right here, 2360, 2361, a yellow line. Why did I place it here? Because I can see when we came up there green, they rejected it close to that yellow line. Again, we came up, they rejected it. Here we closed above it, and then we made that previous all-time high, and then it came right back down. Again, look at where it closed, right at the yellow line. Next day, at this yellow line, a bullish ignited candle opened, and then we had that big drop. Again, over here, we had this big green day, break above that yellow line, come back down, close right at the yellow line. Next day, red, push down. Again, we come right back up, close right by that yellow line, then they pushed it right back up. Here we close below, and then you see here, that's where I placed that yellow line, and look at where we came up. 3 days, 1, 2, 3 days, again, right at that yellow line, and then they rejected it with a bearish ignited candle, pushing the market right back down. Again, it came up green, right to that yellow line, and then they pushed it right back down. We were barcoding here, red, green, red, green. Here was the official break the day before NFP, and we did create a new high, but nothing really materialized on it. And you see where it came right up to too? I could have another yellow line right here at 2387, not just by looking at the NFP wick, but looking at these two bodies. We closed, and right there, there's a little bit of structure right here. I could even place it a little higher, maybe get these two bodies and that wick over there. But first we got to see if the buyers can bring it through this zone. So that's why if we just break through right through here, 23.40, it could be like a daily fill right to 23.60. That's $20 move. That's 200 pips right there, just from there to there. And then if we continue to push, then maybe I would draw another yellow line right around here, 23.78. This would be my next zone. Why? Because I can see some structure right here. Here, there's a wick right there. There's a body to body. There's a wick right there. There's a body and a body right there. There's another wick right there. I could continue to go up a little bit higher up to there if I want and continue to make this grid and just watch how the lower time frames trade in between here. If we come down bearish, like that's just to move bullish through there. What happens if gold gets rejected and we start to push back down into here? Do we have some structure below us down here? Absolutely we do. We've got structure everywhere in the markets. It's just where are we gonna, what are we gonna look for? There's structure right there. Okay, there is at 23.20. If you look here, right there, there's a body and body, there's a wick, there's a body here. Like I could place a line right here, but is it too close? Right there. The reason why I put it at 23.20, again, there's a body and a body. There's a wick right there. Here we've got a body and a wick getting rejected. Here you have this big red candle that broke the previous yellow line and then came right there to this yellow line and then came back up. I could place it a little lower, like down to here, depending on how big of a daily zone. I'm going to keep it here because below here is a lot of liquidity. They grabbed, they closed it here. Again, it came down and then it went aggressively up there green. So this area, 23.19, 23.20, like right in here, that's where I would draw a yellow line. We might come down there today. Okay, now let's follow today's daily candle and how it moved from yesterday. Okay, so let's now just focus on these two bars right here. So yesterday we opened and it was red. We opened right here at the yellow line, 23.19, and it came down red, red, red. We took out Monday's low. You can see a new lower low. Okay, and then we pushed right back up to where we opened. It came and it touched right at these previous bodies. And did we close bullish above there? Did we engulf that red one? No. It came back down and got rejected, but still closed with relatively pretty bullish volume. We closed above 50% of the previous red day's candle, and then today they opened it up and we came bullish. It was green, green, green. We took out yesterday's high and we came right up there. Our high of the day is around 23.35, so I place a purple line at today's high. Okay, you can pick whatever color you want to use to define your charts. What is NFP? Take my word for it. It's non-farm payroll. So it's it's the first Friday of every month. Technically, not always, but first Friday of every single month. And it's all the labor numbers of all the jobs, the payroll, excluding farm and agriculture. Okay, but it's really, really like volatile, and it affects the U.S. dollar, which in turn affects gold. So if you're trading it, make sure you're aware of what NFP is and what time it is. It's 8:30 a.m. Eastern on technically the first Friday of every single month. Okay, and we came up here bullish. Okay, today was strong, but look, today's high is a lower high from Friday. It's a lower high from Wednesday of last week, and we're still in this red box of 50% of NFP's big bearish body. Okay, so and then it got rejected here, and then we came down. There was a lot of offers up there, and then they pushed the buyers back down where we came red, red, red. We came back down to our low of the day. Okay, so that's our low of the day, 23.23. Right in here. So I'm going to place a purple line at today's low of the day. And what happened at the low of the day? Now I take a look at the previous day's green body. We traded right into about 50% of yesterday's green volume. And when it came down there, we found some support. We found some bids. And then the buyers were asking to trade back up here. So this is where we are right now. We're trading again right at that yellow line, that point of interest. So today is a day where the US banks are closed. You can see we're it's a indecision bar where we opened up green, the buyers were in control, then the sellers were in control, they brought it back down, now the buyers are bringing it back up. This might close as a 50-50 neutral candle. No one really is in charge of the move. You know, like if you're watching a Euro Cup game, like possession, like right now, I didn't see the final possession of Croatia and Albania, but at one point it was 67% Croatia and 33% Albania. So 2/3 of the possession was the ball was in Croatia's, they had control of it. So who has possession of this candle? Basically, I would say now it's maybe 60-40. 60-40, the sellers are in control of this candle. But it might finish like 50-50, even. So we can't get too much data from that. You know, it might be just a day of consolidating until tomorrow, until the US banks open up again and then start to move the markets, okay? So we might just, if we're now, when I see this type of bar on the daily, as a scalper, I might be looking for smaller scalp moves. I might find my hourly range and just, or the 5-minute structure and just trade in between there. I'm not looking for a massive move. I don't think there's going to be a massive breakout today. Do you guys understand how I take it down from the daily? And then if I see if the daily candle is nice, big and bullish, then I'm thinking of buying or buying the pullbacks on the lower time frame at fair value gaps or areas of support or hourly support levels. On a day like today, you can scalp the moves. Like you could be a buyer, you can be a seller, but it could be choppy too. So then I use caution when I see a bar like this. Okay. So I'm going to follow where this thing closes in the next 5 hours. Will it close back below here and then maybe we push red back down in here? Will it close a little higher and then maybe tomorrow we'll get some green momentum to break through this supply zone up here? Okay, so did you guys understand everything what I just explained on the daily? Because now I'm going to break the daily candle down into the hourly. So then we're going to see exactly how it moved at 2 a.m. That was where we had the British news. We're going to go into 3 a.m. where we had live London. We're going to see how this thing moved at 8 a.m. at COMEX. Obviously, Wall Street is closed today, so we're not going to see maybe some significant move at 9 or 9 a.m. Okay, so what I do now is take an overall snapshot in my head of what the daily candles are doing. This could be like a big daily head and shoulder pattern when I look at the overall picture. Like this entire zone over here of all of this could be like considered to be like a left shoulder, and then we came, our all-time high breakout represents the head of the move, and we came right back down and we're trading kind of right in the right shoulder now, where NFP made that lower low and we're coming right back up, and then they could continue to drop it down. We'll test maybe this green box at some point. If this doesn't hold like it did right here and like it did right here and like it did right here, sellers could come down with real supply and break this, maybe close it below here. Then what we do is we will finally flip this green box to red all the way since April, since May, since June, who knows, maybe this is like July we're going into, and this might be now an area of resistance or supply, and then the buyers down here are buying it right back up. We come into the red box if we flip it, and then they might push it back down, and then to target this level right in here. You can see where there was support in the market right there for multiple days. This is a little bit higher time frame, but I'm just showing you maybe how to identify a zone if we do get down here. Sorry, let me just right here. So I'm going to make this zone green. Why? Because I can see here we closed above it and then it came back down and held here, kind of bounced out of there, consolidating, bounced out of there, and then we didn't break below here. So let's stretch this into the future and bring it, look at it, and it's a nice whole psychological number, 2150, beautiful zone. And not just the number, but the price action also confirms that it was support in the past. So we could see a fill come down all the way down there. What do you guys think of that? Does anyone think that gold could sell potentially down there? Or are we more bullish on gold? Do you guys think this will happen? Do you think we'll close above here? We'll flip that red box, turn it green, and then maybe we're moving back up to test the NFP high, and who knows, maybe the all-time high supply box. Okay, option A. How many of you guys are this option? Option A, bullish on gold to come back up here. Who is, if you are option A, write down A in the chat on Zoom and YouTube, guys. I want to know who the bulls are of gold for this bullish move. Anybody? Or Philip, A, bulls. B. So some of you guys are okay. Again, that's what the beauty of the markets. We all have different opinion. Some of you guys are A for the bullish move. Some of you guys are B for the bearish move. And me, if you ask me, I'm leaning towards maybe bearish, but I'm indecision because we're trading in here. So I need to see more and more. I need to see if the buyers can bring it up here and maybe close it above here. I want to see if the sellers can push it down and close it below here. So there's a lot going on, but it's beautiful when there's a debate or difference of opinions. Okay, so but I'm not going to say that just because maybe I have one bias that I'm going to neglect the other one. I'm not naive to think that. I'm just open to see where, if the volume will talk. At the end of the day, you and I, we can talk all day. We can have our opinions. But at the end of the day, at the close of the candle, the volume does all the talking, not me and you. So that's why it's important, guys, to look at daily candle closes. That's why it's so important to do a nice top-down analysis right before you start your trading. You can do it on the weekends if you do your charts. Do it on like today. Today's a light day in the markets. This is a day that you could be brushing up and doing higher time frames on all the securities you do. Doesn't have to be gold. It's on any security you do. Okay. So right now, it's an indecision candle. So if I bring it down to the hourly now I can see the exact hours how gold has been trading for the previous few hours. I can look into how it started this entire week. I could look Tuesday how we were trading. So if I want to look at the move today, when did we start? So right over here, this was 1 a.m. 1 a.m. is 2 hours before live London, my time, 1 a.m. Eastern. It came down red. See, at that point of interest, still holding. Wick came out of there. We closed. Here's a nice 2 a.m. we had the pre-London news, and then here's London market open 3 a.m. Nice big bullish ignited candle to open 4 a.m. We broke this previous high and that high, and that's what created right now. You see how it tapped into our high of the day. So now I know exactly at 4 a.m. Eastern, after London had their British news, London market opened. 4 a.m. is Frankfurt opened in Germany. Okay, so make sure you guys know your times and everything like that. It will also help put the pieces of the puzzle together. So I can see 4 a.m. made the high of the day, and then they kind of pinned it up there, and then they brought it right back down. And then look at 5 a.m. They flushed everything. 5 a.m. is one 60-minute candle. Look how much volume it took out. It took out 4 a.m.'s volume. It took out 3 a.m. volume. It took out the 2 a.m. volume. And it also almost took out the 1 a.m. volume. So 1 hour candle, this big bearish body, basically engulfed 1, 2, 3, 4 hours of bullish volume. So that's a very aggressive push right back down to test where the buyers are. And then the buyers did come back up at 6 a.m. a little bit below 50% of that volume, and then push it right back down, close as a pin bar. Then we get into 7 a.m. where it opened red. It was initially red, but came right back down to our daily point of interest, that 23, 26, 25 area. It did create a new low, so I also look at the wicks as well. It did create a new low, but then when it did, picked up a lot of bids and came right back up really strong. And then here's our big 8 a.m. This is COMEX candle, open green, came back up again. And you see the hourly. Okay, guys, I've been known to use white lines on my chart as well, and I look at hourly structure. So can we see that there's some hourly structure being built in the market? Like right here, below the high of the day, there's hourly structure right around here. I tend to focus on bodies first, and then if the wicks line up, but I don't just look at wicks first. I don't know why I do that, but I believe that the bodies hold more true value than the wicks. The wicks represent the range where it went and where it got rejected or exhausted, but the bodies represent the open and the close. So to me, I don't know, by watching candlesticks for a few years, I've noticed a lot of things happen right at the direct bodies. So here I put it at the direct bodies right there at that inverted hammer candle and then the red candle around this area, 2332, 2333. And then I see, like, then I kind of line up the pieces of the puzzle. We came up there right around there, and then that was in fact resistance. They pushed it down. That was the breakout that made the high of the day, but then the volume came right back down right there. That's where that big red bar started. And then look at the COMEX move. It was green, green, green right into that white line, and then they rejected it back down. And you see, again, we created a new low below that daily point of interest, but then it came right back up with the buyers and closed with that. So this is the consolidation. Then again, 9 a.m. came back up green, 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 green. Did it close above that white line? Did we tap into the white line? It made a lower high, and then they pushed it right back down, but no new lower low. So close with thin volume. Then 10 a.m. small green candle open. Remember, look at the size of the wick now, big rejection. Then we came down red, red, red. We broke for a new low. So now I know it hit the purple line. That represents the low of the day. Now I know in my head, 4 a.m. Eastern made the high of the day, 10 a.m. Eastern made the low of the day, and since then we came right back up, and this is what our 11 a.m. candle is. So if we follow our 11 a.m. candle, we just opened, it came red, 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 still higher low. Look at what we're trading into, kind of 50% of this green candle right here. If I wanted to draw a green box zone, I could on the hourly right in here. And then you see how it lines up with these wicks and wicks to the past. I know it might be a lot of green boxes here, but I just want to show you how you can interpret and break down the hourly. Right over here. Go to the wicks to the bodies right there. I'm going to do a neutral box so you can see neutral before I put a red or a green candle. Okay, do you guys just see what I just did right there? All I did was I see a body and a body. Remember, I told you I put significance on the bodies first, body and a body. Then I see that there's a wick right there, so that's the size of my box. And what I do is now I verify it. So I bring it again to the right, to the future, and then I see when it came green, 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 it in fact came in there, 8 p.m. Eastern, that's futures market open on Monday, came back down. Again, we came back up green. They rejected it right there. Again, we came up green. They rejected it there. Again, we came back up green in there. They rejected it. Then we started red, pushing down. So right there, just by looking at that, my box should be red, right? Do I see any green volume close above these wicks or above this box? No. So this represents resistance. So I continue with the same size box. I bring it into the future. Now I see a green, red, green, green closed above. So right on this bar, right, this green bar exactly at 11 a.m. Eastern. Yesterday, you know, unfortunately, when we had our audio issues when we started the call, remember guys, in Zoom, we were in that gold buy. Okay, that was us. We played those gold buys. But the gold hourly candle closed above that point of interest. We were in the buy. We had a stop loss below, and we collected, some of us 20, 30, 40. Maximum was that 47 pip move to the red box. But right there, now, with the green body above, we got to flip the color to support or demand or Mickey Mouse, whatever you want to call it, and continue to bring it into the future. Now I can see today. We hit right in there at 8 a.m. COMEX and bid right out of there. We came and we broke it just prior to this call at 10 a.m. But that's what made the low of the day. But it came back and it closed again above the box. And then 11, we came right into the green box, and now we're coming up. We're coming up bullish, engulfed right now. This hourly candle is going to close in 11 minutes and 40 seconds. And look, it's pretty much, what is it? Tweezer top highs on the hourly. Look at the highs. equal highs on this hour. Exactly 2328.474. I would round this to 50, 2328.50, and you can see it's equal highs. And then they're pushing it down a little bit, but we've got a big bullish candle. So what I want to see now for the next hour, I'm going to place a white line right here above those tweezer top highs. This high, see the big spin top body? This was green, 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 green. Came back down, and look at, they closed it red right below that white line. Again, when this candle opened, came right up there, back down. We just tapped into it right now, and then they're pushing it down. Will this green body close like engulfed, and then we might move up here in the next hour? Again, where's my next hourly range? Okay, look at the structure. This white line is pretty far away. Me as a scalper, I can see structure right here. If you can't see this, we all need to smoke a joint together. Okay, right here. Body, 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 right there. And then you can see how they're equally spaced apart. I don't even need to get my measuring tape out. But if I need to verify, if we're building a deck, I built a privacy fence around the hot tub. It turned out pretty good, guys. If you guys need any work, I'm available for small projects. But right here, let's measure. Let's see if Ron's zones are correct on the hourly. Let's just see, okay? From right here, white tape, white line, whatever you want to call it, to the next white line or white tape. Exactly 20 pips, okay? Let's measure the next zone. From the white line to the next white line, or tape to tape, or zone to zone. What do we got? 21 pips. Okay, I'm off by 1 pip. I'm sorry. And then let's measure our next zone from the hourly to the daily high. I'm not a betting man, but I'm going to probably say it's close to 20 or a little more. Let's get it all the way up there. 20, 22, 23 pips. Okay. And then what if we move down from the white line to our daily point of interest? Probably around 20 pips, give or take. Yeah, 1990. Okay, I was off by a tenth. But you can see now I've got 20 pip zones. Okay, and then if I want to scalp on the 1 minute or 5 minute candles, if I get like a 5 minute candle that just fills right up to there, bingo, bango, bongo, trade like a robot. Maybe you'll get 20 pips with minimal to no drawdown, make a move. Maybe if you hit 2 or 3 of these trades a day, you can make 60 pips, 80 pips. Some of you guys I seen in the Zoom, you guys are posting. Some of you guys are going 10 for 10 on your scalps. Like you guys are putting up Michael Jordan numbers. Like it's getting ridiculous what some of you guys are doing now. But you're understanding the power of zone to zone trading, and it's keeping you guys disciplined. That's another thing. It teaches you now also where to maybe place a stop loss. It teaches you like a lot. Teaches you if I'm trading for 20 pips and I use a standard lot, I could probably make $200, and if my stop loss is below the next zone, I could probably lose $200. But at least I know my maximum win, my maximum loss as a scalper. If I'm okay with the $200 loss, then it's okay. But if I'm trading with $1,000 account and I'm trading with those heavy lots and I'm risking 20% of my account on one trade, it's probably not good risk management. Okay, so you guys understand now what these lines indicate. I'm taking a while today because it's slower in the markets, but I want you guys to really understand this, and then we're going to move into tomorrow with better trading volume. But look at, now we're getting a nice big hourly bullish candle breaking out here. Again, this green box, once we identified it, now bring it across. And also what I do now, benefit of the doubt, I can see now when we broke this daily yellow line, it came down, back up, came down, back up, volume. So what I do is I increase this green box to that yellow line. So you see now how I found my bigger zone. So I will not be looking to kind of sell into here because this is showing me that there's a lot of bids in here. There's a lot of buyers. I will only kind of look to sell below this green box if the sellers can in fact cut through this green box, maybe break that low of the day, create a new low of the day. Then I can flip the green box to red. Let me show you. If that happened, then I would flip it to red, because now the zone might flip. The book might flip here. So if we get that creating a new lower low, we broke the daily low, close below there, and then I know that there's going to be some buyers that will bid it right back up at the low of the day. So it will come back up green, 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 and then I've already flipped my green to red, because now this could be filling up with offers, and then if those offers absorb all those bids, then we might get a flush coming down, trading down to the next low and the daily point of interest. Okay, so but for now this box is green, and I've established it's green, and I don't stop there. I gotta move it into, we're gonna trade tomorrow together, we're gonna trade Friday together. I'm gonna go into I'm coming to Europe next week, so this is gonna be a same green box going when I'm in Germany, when I come to Albania, when I come to all over and visit you guys. This is still gonna be a green box. So even if we pull back, if it comes down red, 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 I'm assuming that it's going to get rejected or bounce out of here and come back up, unless option B, it closes below. Are we clear on this, guys? If you understand this principle, you'll understand how to scalp the markets on a lower time frame. This is on the hourly. Okay, I'm just showing you on the hourly. But remember, doesn't matter. If I took this watermark off and you didn't know I was on XAU, USD, or 1 hour, you would have no idea. I could tell you these are 1 minute candles. I could tell you these are 5 minute candles, 15. If this was like a 1 minute move, this was a 1 minute candle that flushed all the way down and came right back up in the green box. I maybe scalp this 1 minute candle. I buy that candle, and maybe it's a good 10 pip candle on some securities like US 30 and things like that. But very bullish. Now, are we going to tap into that next 2330 right up there, that hourly resistance? Let's look at it on the 5 minutes and look at how the 5 minutes are moving. Beautiful. Okay, so look at how the 5 minute candles respected the green zone right here. This big bearish candle, 10 a.m. The new hourly candle flushed, came all the way down, took out those two tweezer bottom ignited bar right there, closed below. That's what made the low of the day. Came back up, and look, it started bullish right away. Did the sellers even attempt to come back down to the low of the day? No, it came back up. We closed 50% of that red candle. Then it came all the way right back up again, lower high below that hourly. It pushed down again right into our green box. It made a higher low, coming right back up. But the buyers could not break for a new high. So naturally what happens is more offers come in the market and push it down again. But look at what the buyers are doing. This is like a soccer game. You know, it's two teams are playing here, but this team is building a little bit of momentum. The green team right here is building momentum. They're making higher lows, higher lows, higher lows. And now, in fact, if I was looking at the 5 minute structure, you guys know how I trade if you tune in. Right here, I have a red line at those tweezer top highs. There's the neckline right here, exactly at 2327.866. You see how it came right up there. That was the first line of resistance, pushed down. We made another attempt to get up there, lower high. They pushed it down. Now, this is our first body right here at 1140 that closed above that red line. Okay, so this might now, if I'm drawing like a 5 minute support level, I'm sorry for all of the colors in the boxes, but right below that red line, okay, I look right there, bring it down to that next, see right there, guys, what I just did? See that body, and then I catch that body. I move this now, green box going across. This might be, if there's a pullback, this might be a fair value buy. If you want to place like a pending order in here. For example, right now we're getting a nice bullish breakout, maybe testing that hourly white line, 2330. But if the 5 minute candles retrace right back down, I'd like to see them get a higher low support right here at this white line at 2328. However, if this doesn't hold, I'd like to see maybe this green box hold right there, because you see there's a lot of volume in that candle that never got, it's pending, it never got triggered. So maybe if the market comes back down, triggers, that could be the bounce that comes right back out of there. But then if I'm scalping a small little scalp sell, if it closes below there, I flip this little zone red, I could scalp all the way down to the top of that green box. And if I'm doing that, I measure. So just so I know, just if I'm counter trading or if I'm looking for that, I should know that it's approximately 12 pips. If they do break it down just a little bit down in there, maybe you get 15 pips and you got to bounce out of that market, because that's deep in the green zone. That might be where it gets a wick and rejects right back out of there. But if I'm looking for just like a quick little red scalp candle down there, I know that it's 10, 12, maximum maybe 15, 16 pips, and I got to dip out of that market. Okay, that's if you're counter trading. Right now, you have to be very careful because the hourly candle is very bullish. The 5-minute candles closed above structure right here, and they're pushing right back up. Where could they go? They could go straight up to that white line. That's the hourly resistance. And we had one false breakout right there, and then it came back down. But even the 5-minute candles, high of the day, right here at 8 a.m., lower high. Again, it came back up here at 9:25, lower high. So we're coming right back up, but what happens if it comes to the white line and rejects back down? And then this could be a lower high. So then, is there any other gap you see? I see something right here. See the wick and to the white line? I know it's going to be a lot of green boxes, but I want you guys to see how these things might play out. Do you guys see that green box? Do you guys understand why I put a green box there? Do you guys see, like on Bookmap, how it created a little bit of heat right above this VWAP, this white line? We're pulling orders, we're pulling offers out of the market right now. But you see right here, the first pullback stopped right there. And you see all of this bullish green volume in that box is pending. It's pending. It hasn't been tapped yet. So if there is a red candle, I'd like to see how it will react. Maybe it comes right deep into here and then gets a wick and comes out of there, closes back here, then a higher low, then we're continuing to move forward. Okay, so and then this is where, if you kind of want to stay with the bullish trend and then you want to avoid selling, then if you miss it, then you wait for the pullback and you continue to buy the dip. You continue to buy the pullbacks at areas of pending volume that hasn't been triggered. These are buyers that got in or have pending orders that want to get in here. You can see they're right there. See that heat sitting right there? These are pending buy orders that are waiting to get activated. Maybe they're going to continue, maybe they're FOMOing, so they're missing out, so they're increasing now their pending orders. And look at now, if you follow your principles, we closed right near the high. Next bar is basically an ignited open with a pop. So we're coming right back up to maybe tap into that white line. And if I was scalping this on the 5 minutes, like if you bought this, that's a nice scalp, guys. You know, like that's a clean scalp in 3 minutes that could come right up to that white line, and then you net yourself 15 pips. So that's scalping. But really nice move on gold. It's bullish right now, so careful trying to sell this thing if you're trying to sell it. We broke above the 50 RSI, so it's in an area of strength. So this is kind of like a neutral area if you do follow RSI. We're trading at 63 on the RSI, which still has momentum to continue to push. Maybe a small pullback, then it gets its next leg up, comes into that overbought territory. Maybe it wants to squeeze some more shorts up there and make its way up there. But do you guys see how kind of this big green box held good support, and then we closed above? Like this, you could have bought this spin top candle, you could have bought this ignited candle, any one of these candles could have bought, and then you just place your stop loss where you feel appropriate on how much you want to risk. Always measure your stop loss so you know exactly how much you're risking. Okay, and then if we add now your EMA 9, okay, we're above the EMA 9. So this now you can add for like kind of confirmation if you're looking to take a trade. Like right over here when it closed above, we're above the 9 EMA. So it's short term, it's bullish, it's strong. EMA 200, right there, we just crossed above right now. The 9 crossed the 200 EMA. So this is what's called the golden crossover. You see how they're lagging behind a little bit? Like price action is a leading indicator. If you understand price action, you could have bought that wick or you could have bought the break there and you're up 10 pips. But if you're following indicators, like they're now telling you that now it's getting bullish, like the 9 is crossing over the 200. But look at the price action, it's already 15, 20 pips ahead of your indicator. So I like to use these for confluence, not directly trade off of these things. They do also give false signals, so you do have to be careful. Okay, so now we tapped right into that hourly resistance. Okay, if we have now like an impulse breakout, here was the previous 5-minute break. Do we see some structure on the 5 minutes? Can we get some multiple touches? I'm going to say right here, I can get, as a scalper right here, it's kind of wicks right there, a lot of wicks right there. The body's closed below there. There's a body that closed above, retested it. That kind of green candle traded right into there and pushed right back down. So maybe we will come up to 2331.50. If we get 5-minute volume closing above the white line, maybe we'll continue to push through here. But if we get a pullback, then maybe we're going to test 50% of this bullish candle. It's really strong. Like they're ignited opens. They're asking. Look at they keep asking to trade up here. The offers are all getting pulled out of the market. We came from all the way here where the cumulative volume delta of the transactions was negative 300. We made our way back up where we balanced the market back to zero, and now we're trading at positive 150. So you can see that the delta flipped over here on the transaction volume. So that's really good. Is anyone in a buy right now? I'm getting a lot of text messages about the Albania-Croatian game. I have a lot of Croatian friends, but they got to know we're trading right now. Okay, so gold is moving nicely for a day when the US banks are closed. Guys, this is our Scalper Pro. Okay, so I just want to show this. You see here where it kind of gave a scalper buy signal right here. It did, and then pulled right back. But then again, right here, it kind of caught this move right here, Scalper Pro buy in the green box. And so if you kind of follow the Scalper Pro, it's not 100% accurate, right? But you use this as confluence with your trading, just like an indicator, just like a 9 EMA. You use this as in to complement your charting and everything like that. Here it offered a quick little scalp for about 10-15 pips. Here it offered a quick nice buy order right here that pushed really nice. Again right here, maybe get you a few pips. Remember, this is a Scalper Pro, okay? So it's not a Swing Holder Pro. Scalper Pro can get you really nice positions. And then right here, again, it kind of bought the bottom right here, 23.25. And coming right up here, that's a good 50 pip move. But if you guys want, I can leave the Scalper Pro on the chart with us. And we also have a scanner as well too, what we can use to kind of go through the markets and look for what's overbought, what's oversold. Yesterday, guys, I apologize on the call. Like when we started it, we saw that US oil was really overbought on the 15-minute. I think it was like 73 up here. It was red. It was showing us that's a security of interest we should be looking at. The 30-minute was also red, overbought at 75. The hourly of oil yesterday at this time was overbought. It was like at 77. So what I would do is what we were going to do if we didn't have that audio issue is we were going to chart gold, and then we were going to look at US 30 and look for maybe a potential sell in the market coming up. So we've got this scanner that we can use. You can see it's looking at gold right now. So the 5 minutes I can see is 66 RSI, 15-minute 58, 30-minute 55, 1H 1 hour 55, 4 hour 56. Daily is neutral 49. So kind of gives us whatever we're looking for. It's got gold, NASDAQ, US 30, GJ, US oil, and GU. So I tend to look at this to maybe kind of shop around, look for security, what's good to trade, and things like that, okay? Guys, what's going on in the chat? Sorry, did I miss anything? Is there any, if we get a pullback, do you guys see maybe any other gaps? Okay, so another green box, see kind of maybe where this one opened, ignited to that wick. Again, there's that little zone right there. And what I tend to do is locate 50% of that bullish candle right there. I kind of cut it and then make that green again. So we still haven't even pulled back in this zone. So this one's pending. We haven't even pulled into this one where that golden crossover took place. That's still pending. Maybe this one is going to have red momentum come into here, but again, I'm waiting for it. Okay, so we're clearly moving bullish. We're going to see if we can take out this previous high. I'm going to just place it at that previous high right there. Can we take out 2331.614? Can we break through here? Philip, sometimes there's so much difference between levels and also candles on gold. CFD versus futures chart, which one you trust more? I would trust the futures chart more, Philip. That's more live liquidity. It's direct right to the data, like to the central source. So I would trust the futures over CFD 100% all the time. So if you have access to futures data, I would go with the futures chart. Philip, good question. You see, sometimes like when we see Bookmap kind of gives, it's like a leading indicator. It kind of gives us a move before like TradingView even moves. So this is a live depth of market in the futures. So these are direct pending orders that are going right to the central data source, right to the central exchange. So I would put in favor any futures charts over CFD. But good question, Philip. But again, just compare both of them. You know, that don't just take my word for it. What I do is I always compare. So like tomorrow, what I would do, like this is what I used to do, guys. So I'm just telling you. So what I would do, Philip, if I was kind of comparing one security, gold, but with an Oanda chart, with a FXCM chart, and maybe a futures chart, I would put them together, and then I would watch the specific time frame that I trade, whether it's 1 minute or 5 minutes, and then I would see which one is more accurate, which one moves better, which one shows more a true reading without so much manipulation and gaps and things like that. So then I found that the futures charts were a little bit more consistent than CFDs. So you guys tell me what you guys think about that. Who is Lorenzo, guys? I'm not sure who Lorenzo is. YouTube, fill me in. Lorenzo. I don't know Lorenzo. I don't know who it is. Shoutouts to Lorenzo. No clue who you are, bro. Okay, guys. Is there any other security we want to take a look at? Do you guys, I'm going to ask you, do you guys see something worthwhile charting? Do you guys see something moving? Like probably the index are not moving. US banks are closed. Gold, oil, yeah. Steve, you want to take a look at oil? Let's look at oil, guys. What time is it? 12:11. So let's wait for this 5 minute candle close. We got 3 more minutes. And then we'll start charting oil at 12:15. Awesome. Appreciate the like, Lorenzo. Thank you, bro. Appreciate you. Lorenzo Corrado. Welcome, bro. Thank you. Okay, so, and then also when we do oil, I'll show you how oil looks on Bookmap, okay? We'll bring up oil. We'll take a look. So just, guys, understand, okay, if some of you guys are trading futures, okay, so I just want to give you just a quick little, if you're trading S&P, which is ES, okay, so S&P 500 is ES. If you're looking for the ticker, look for ES. It trades on the CME, okay, this exchange. NQ is NASDAQ. NAS 100 is NQ. It trades on CME, okay? And then we have YM is Dow Jones. It's from CBOT, CBOT. If you're looking for the ticker, look at CBOT. And then gold, this is gold in the futures, GC. Okay, Q is the contract over here. M is the contract, the month. But GC is gold, and you can see we got to get it on COMEX. And then when we move over to crude oil right here, CL, it's on NYMEX. So that's the New York Mercantile Exchange. Okay, so if you're having difficulty finding these tickers, maybe you want to take maybe a screenshot or write this down. Crude oil futures is CL, and look for it on the NYMEX, New York Mercantile Exchange. Gold, again, GC, COMEX. Dow Jones is YM, CBOT. We got NQ, NASDAQ, CME, and then your S&P ES mini over here, CME. Okay. So we got 1 more minute to go on this 5-minute candle. We've got volume closed above the hourly resistance, now turned to support, and we've got we're going to get a new 15-minute candle in the next 45 seconds. So if there is a pullback, we might see something red, 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 but maybe it comes back down into here, come back up. If the 5-minute candles are starting to get exhausted, maybe it makes kind of like a double top and then comes back down as an M. So this is where we got to be very careful, because it comes back down, it could go back up. But then if this structure actually breaks and you can flip that red, then maybe that might be the drop coming through here. Look at this nice big bullish move coming right through at 10 seconds to go to the close. So let's watch. And we're getting a new 15-minute candle. If you're anywhere in a buy on all of these bars, you got kind of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 green bars in a row. I would highly recommend putting a trailing stop loss, trailing this trade behind. You got to do a little bit of risk management, maybe go to a break even, trailing stop loss, secure some pips down here, because there could be a pullback. But now we want to see, will the hourly white line hold as support? Maybe this might be where the volume now kind of consolidates at that previous high right here, this wick, down to the hourly right in here. Maybe this is where the market may trade sideways now. Inside here. Let's take a look at this. You know, like when you're looking at your RSI indicator, yes, it's 67, but it could continue to push up. But this is where maybe we might see it come down red a little bit. But don't just kind of trade one single bar red candle unless you know what you're getting into, because it opened ignited, it came down right into about 50% of that body and kind of wicked right back up. But it still has that ignited head, so it is a hanging man candle that opened a 15-minute frame. So just careful with this thing. Okay, I'm just going to get rid of this big red box right now, just to kind of clean it up a little bit. Okay, so we're going to move to crude oil. Okay, we're going to do a little crude analysis. So if you guys are in gold, just please monitor your trade. I'm going to go off of the gold on Bookmap. We're going to put it on CL, NYMEX. This is crude oil, okay? So I'm going to put it down to the 15-minute time slices. Right here is 11:30, 11:45, noon, 12 p.m., 12:15 right now. So I can see that kind of it came down. Sellers were in control, making those lower lows, lower highs. It kind of bottomed out right there at $80.50. So I'm going to place like just a yellow line here so we can keep an eye on this area to see if the depth of market starts to build here at $80.50. We are currently below the VWAP, the volume weighted average price. Cumulative volume delta currently for crude oil is negative 1,500, so it's got a lot of sell side volume. But let's take a look at crude on the higher time frames. Okay, so US oil is what I look at. Wow, like big sell. There's our SST Scalper Pro, like kind of giving us maybe a signal to sell. There was a nice 3-bar play, but then it came right up. I can see the double top right up there and pushing down. Okay, so let's clean up the charts, and we're going to start with a proper top-down analysis. Crude oil is like a really nice. How many of you guys do trade crude on a regular basis? Lorenzo, thank you, bro. Take care, bro. I appreciate you. Thanks, guys. Almost 350 viewers. You know, shout outs to Lorenzo for bringing some traffic in here. I appreciate you, boss. Thank you, bro. Keep up the great work. You know, guys, it's good to support the trading community, guys. We're all retail traders. Let's stick together. Enough with this bullshit. We're not competing against each other. We compete against banks. We compete against the institutions. We compete against market makers. Stop all this unnecessary rivalries between what I see with retail traders. We're all united, guys. Okay, we're all on the same team. Let's get the liquidity out of the markets, fill up our pockets, and improve our life financially, and just learn something new. Educate yourself, guys. Work together. Okay, so thank you. Now let's move to crude oil. Okay, so on the daily. Okay, so again, we're going to do what we did with gold. Okay, same thing. You know, sometimes it take 5-10 minutes out of your day to do a proper, thorough, top-down analysis. This is something you don't need to rush, because if you do a proper top-down analysis, you set yourself up for the week. You set yourself up for going forward. You understand the higher time frame bias. You don't need to wing through this. Like, I can do a top-down. If you guys want to see one day, I can do one in 60 seconds. Like, I can do one in 2 minutes if you guys want, and we can go through charts real quick, because I know exactly what to look at. I've trained my eyes what to look at real fast. I slow it down for you guys to understand, because I don't want to make it confusing. And then what you see is I do the same thing over and over and over. So now we're on a different security, US oil on the daily. Now, again, I look at main zones. Okay, so right now I'm going to look at main zones that maybe are not even close to being tapped. So right up here, I can see that there's heavy rejections right up there, right down to the bodies. So I start that zone and stretch it into the future. Okay, is crude oil ever going to come up to $87.50 a barrel? Maybe, I don't know. But if I don't identify it, then I don't know that zone. Okay, so I can see crude was trading in here early April. Came multiple times, consolidating, green, red, green, red, green, red, rejection. Then they brought it down, came back up, lower high, pushed down, break of support right here. So this is a zone. Now stretch it into the future. Like, bring it where? As far as you want. I don't give a shit where you want to bring it. You want to bring it next week, next month, next year, 2026? Take it wherever you want. You've now established a zone in the market. If crude ever does come back up there, maybe this will happen. Comes back up there, gets rejected, maybe a double top, and then crude is selling off. Option A. Or it could be option B. We flip the zone. We flip the book. The buyers break it out of there. They break this previous high. They close it with a nice green bar up there. And then we flip that red box green. And then the pullback, sellers are selling right into big buyers of crude at $87, $87.50 a barrel. Then the buyers are bringing it up to 90 a barrel, maybe 95. If we look to the left of the chart, I can tell you exactly where we'll move. We'll move right up to here, $90 a barrel. There it is. We'll move up to these two tweezer top highs structure right here, $93.50 a barrel. There's the top right there. I'll show you the exact date. Friday, October 5, it was trading at $95 a barrel. Like, we can do this, no problems. But it's good to start somewhere and identify what can happen. I can already see like a inverted head and shoulder building on crude oil right now on the daily. Okay, so other areas, like, we're nowhere near this one. Here's where we came down red, and that's it. We pivoted right there at $72.50 a barrel. That was our first kind of pivot. If I look to the left of the chart, there was a pivot right there. Those wicks that broke below, I can see that they were just liquidity grabs when the volume closed above. So I bring this box into right there. Okay, I can see we traded right down into it. So make it green right off the hop. Make it green. Okay, you can see. Yeah, there was a little bit of a fake out, but it's all higher lows. Then we continue to move up. We traded right back down into that zone. That's it, green. Bring it now into the future. When you identify a good zone, don't slack. Don't leave it behind. Bring it into the future. So you're preparing yourself for tomorrow. You're preparing yourself for next week. You're preparing yourself for next month. But you see, the zones are too big. They're too big. So now I got to start charting inside. Now I got to start, like a surgeon, when a surgeon is doing his work, he starts dissecting. So we're like surgeons. We start to dissect zones. We start to dissect candles. So we're all surgeons here. Now it's time to dissect. I can see now in between this big red box, in between this big green box, I can see another zone. If you guys can't see it, then please, if it's legal in your country, go outside and smoke a joint. Right here, I can see it right there. That's all I need is a couple bars to see exactly what I'm looking at. There was that heavy red candle, break that support level, and then look at the pullbacks. Came up green right there to the red box, back down. Came up green right there, that tweezer top high, pushed down. There's a zone established. Let's see how it trades now into here. Here it came up green, back down. Came up green, back down, push it back down. Now we got our first green bar, close above right there. So what do? We flip it green and then stretch it across. And look at how it held as support. There's your double bottom right at that green box. There's leg one up, resistance, leg two right there, and then your final leg down. And then they broke it kind of right out of there, where it came up to that big red box. Okay, so continue with this box and don't stop. Bring it right there. There's your big red bar that closed below. Flip it red. And then you see how it held as resistance here. Came up, back down. Came up, back down. Came up strong, right up there again. Right up to that previous support, turned to resistance, and then they flushed it down. We now bring this across into the future. Look at, we're trading right in this zone right now. So crude oil is going to start to develop. And then it's kind of like a inverted head and shoulder. All of this is left shoulder consolidation. There's your V bottom recovery. That's your inverted head, your liquidity grab, which took multiple days. Look at the drop was 1, 2, 3 days drop, and then the pullback was 1, 2, 3, 4 days back up. Okay, so that was like a weekly move where they grabbed the volume down there, they grabbed all that liquidity down at 72.50 a barrel, consolidating, and now we might be getting the inverted head and shoulder break. So if we can get more volume trading above here, we can flip this red box to green. Maybe we kind of consolidate, maybe double bottom, and then crude oil is moving right up to here, 83.65, right into those bodies right there before it taps into that huge red zone up there. So this is where now I use my yellow line point of interest to start dissecting, just like I said, like a surgeon. But let's just look at yesterday's volume. We in fact closed above this red box. So right now I gotta make this a green box right now. I gotta give the benefit of the doubt that the buyers are in control of this leg, which they are. Higher highs, all higher lows, a new higher high. So any pullbacks, maybe it's going to be buyers buying the dip in here, okay, on the higher time frames. If I'm watching this daily candle, it's going to close in 5.5 hours. Maybe I'll watch how it closes. It looks like it's a low volume spin top bar. U.S. banks are closed today, okay. Now, yellow lines, okay, real quick. Where am I going to place a yellow line? I see one right away, right here. This is a yellow line. Why? This is a daily point of interest. You can see over here, it held right there, that wick at the yellow line, back up. Right there, we broke, but came right back up, and look at the volume closing above that yellow line, couple taps, and then we go up. Again, right here, where it came down. Couple breaks of the yellow line, but the volume stayed above it. There again, another impulse break, volume stayed above it. There we actually closed below. There was a little bit of a push, but quick move coming back up. There we closed below, and there's that big flush. Again, this big bullish candle came up, closed, and look at, we've retested this yellow line multiple times, and it's holding. Okay, so it's good support right there. I can see right there, that's another point of interest. If we do come up, now I'm dissecting maybe right up there. Remember what I also said too, if you get quarter increment moves, and then it matches up with a nice point of interest, you've located a good area. So any security you're trading, especially metals or oil like crude or gold, if like here, if it's $80, always look at your psychological number, $80. Then go up 25 cents. Go to 80.25. Go to 80.50. Go to 83.75. Go to $84, 84 and a quarter, 84.50, 84.75, $85. You know, just keep going up. Same with gold. If gold is at $2,000, go to 2025, 2050, 2075, 2100. You can do this also on smaller amounts too, but quarter increment moves. You know, like when they do FOMCs, they move those on sometimes quarter. Um, 0.25% quarter basis moves, 25 points. Okay, so markets like to trade at psychological numbers. Do we see good support building? Do we see any big bullish candles that we can locate maybe 50% in a zone? I can see lots. I can see another green box where I'd place a green box right here. Kind of held good support right there. Bring it across, kind of catch that wick. This big green candle right here, kind of where's 50% of it? If it open close, half of it is right around here. Maybe I bring my green box up right up to the bodies of interest and bring it across. Okay, so you see I'm kind of really trapping as much as I can. If we're gonna come back down, if it comes down red before it comes back down into here, we got to retest this big green box. Okay, and then that's where they might make the higher low and continue to push it back up. But if it comes back up and then there's a lower high, then in fact they might break this. If it closes below, you flip that box green to red, and then we're dropping back down to test down in here. Guys, keep trading simple. I see some of you guys are overcomplicating this way too much where you don't need to. Just keep this shit simple. Simple is effective. Okay. Now, inside here, these were daily candles. These are individual daily candles that we're trading. I can see some type of structure inside here as well at around 82 bucks. Right around here. Let's see. Yeah, right there. I like this area. Why? Because I got a body to body. I got those rejection wicks right there. I got a close right there. Look at the volume, how it kind of lingers around on that huge daily range candle. Kind of lingers right around at that $82 mark. That yellow line. Again, it pulled right back down to the yellow line, came back up. Here we close below it. So this is, I'd like to see this week, will the buyers have enough momentum on crude to bring it right up to $82? We'll test that zone. If we can continue go, maybe we're going to go up to 83.75 up there. If we pull back red, where are we going to find our buyers? Right here, guys. Do you not see it? Okay. Look, this big bullish candle. Open, close. 50% is right there. And then I got wicks even telling me that previous high was right there. Yesterday's low is right there. I should have a yellow line right here to give me a heads up. If it comes back down to $79.20, right in there. See how it represents 50% of this candle trading on Monday, June 17, right here. Do you guys see? Right there. Open, close. 50% is right there. I also got a wick, and a wick. Wicks don't lie. Bodies don't lie. Okay. So see how now I'm kind of really dissecting, getting my point of interest, and I put heavy point of interest on these yellow lines. These are daily. So when I go down to the 1 minutes or the 5 minutes, I place heavy emphasis on these. Remember, I color coordinate. Okay, so these are just yellow point of interest on the daily. Now what I'm going to do is I'm going to figure out how we're moving on today's daily candle and then we're going to bring it down to hourly, and we'll use some white lines, and then we go into our scalp mode. Okay, so is everyone following so far? Are we all good? Yeah, Aaron, my man, thank you for joining, bro. Steve, thank you, guys. I want to kind of drill this in your heads, guys, like that everybody can do this. Everybody can do this. Okay. I know it's scary at first when you start, trading and learning. It's intimidating, but just keep learning, guys. Don't stop learning. Okay. You'll get this, I promise you. Now what I'm going to do is, okay, what's the overall daily or weekly trend? Okay. Obviously, if we're talking on the monthly, crude oil is bearish. We've been dropping since this big red box up here, since the start of April. Oil has been making a lower low, a lower high, a lower low, lower high, a new lower low, and now it's coming right back up. Is it going to form a lower high again and come back down? Okay, so when we're talking monthly, oil is bearish, okay? But now when we're talking individual days or the last few weeks, oil is on an uptrend. We bottomed out here at 72.50, and since then it's been coming up, higher high, pullback, higher low, a new higher high. We're going to see maybe the next pullback is going to be another higher low, and then we're going to continue to break out of here. So right now, I give my emphasis on the buyers are in control of crude recently, last 2 weeks, but more now individual candles on the weekly. So this week started Monday, June 17. We have a nice big bullish candle that formed on Monday. Again, if the pullback, guys, you guys know this shit. I tell you guys all the time, locate 50% of a bigger based candle. Like, you can't locate 50% on this candle on June 12. This is those skinny candles. Indecision. You can't I can still locate where 50% of that volume is, but it's not significant. We got to find significant candles. This big green candle is a very significant candle. It's full of volume. Where it opened and it closed, it was full, and continued wanting to go for more. So locate 50% of that. This is a nice size candle. Locate 50% of that. That's a good engulfing candle. Locate 50% of that. This big red bar that came down, that's a good size red bearish candle on a selling day. Locate 50% of that. This little guy right here, that's an inside bar. You can still locate 50% of that. Look, $75.47, right at the middle, 75.50, guys. Don't make this shit up. I'm telling you. We used to read tape back in the day by reading tape. This now with technology is too easy now. But consider like how floor traders used to do this with a piece of paper and a pencil. You know those pencils with a eraser on the top? Did anybody use those back in the day, or am I the only dinosaur on this call? A pencil with an eraser. Who uses a pencil and eraser today? Anybody? I do. I still do. I'm ghetto like that. I use a pencil with an eraser still to this day. You know, when Dave comes over and he sees all my scribbles, he's like, "What is this shit? What are you doing, man?" Like, I hate like I like on a piece of paper. It reminds me of how I was learning to do this stuff. Now, this is how I used to do it, guys. You had to figure out and do some math in your head, the open, high, low, close, figure out the mean, figure out the middle, know what the low of the day was, know what the high of the day was, so that you can know how to go forward trading into your next day. Now with the use of technology and all of this charting, like, it should be coming like second nature, guys. Shouldn't be too difficult. But nice pullback right into 50%, that nice belly right there. The buyers were waiting. They were pending in there. Beautiful area. You can see the rejection come right out of there. Then you use your firecracker approach. It's got a low wick. There's basically no wick. There's your pop. If I was following on the 1 minute, 5 minute, 15-minute candle, that would have been a personal buy for me. That's what I look for. I look for those 50% pullbacks getting rejected, and if it's a low wick, pop, and there's your next move to the next area of resistance, especially when I scalp 1 minute, 5 minute candles. That's like kind of my technique, what I do. So you can see too, you can do this on the daily, you can do it on the 4 hour, you can do it on the hourly, 30 minute, 50 minute, whatever you want. You pick your time frame. I guarantee you'll see the same characteristics on candlesticks every single day. Now let's follow yesterday and today's volume. Let's get really start to dissect this. So yes, look at it. We closed near the high. They gapped it down. Okay, I can clearly see the gap down. Then it came red, traded right into the belly, 50% proper retest. It doesn't get any more proper than that. It got rejected out of there, out of that psychological 50% zone. So the 50%, the majority of the buyers are still respecting this move. They're still holding it. That big body is the next move to push, right? And then when we have a low wick to no wick, you know, some candles have high, big exhaustion wicks. Those ones take a while to fill. This one closed right near the high. It's an easy pop and flip. So this flipped right away into a bullish hammer candle. Again, if we look at the yesterday's close, it's a very, very short wick. And we closed right there. Today, now let's follow today's daily candle. They gapped it down. We were bullish. So right away, we opened at $80.68. We came bullish. We popped the previous day's high, and it drove right up to $81.11. Okay, so that's my purple line. That's representing the high of the day today. Okay, so that's my purple line. And then I look to the left of the chart to see if it matches with anything. Is there any price action that can kind of confirm why it went there? This is what I do now. Now I look back. A lot of traders don't do this. All they do is this. They focus on this. How many of you guys do look backwards? Look backwards. Now I can start to see structure. So what I do is I use the line, whatever color it is. This one, in fact, is purple to represent the high of the day. Now I look for structure to build a zone. So I use the purple line as reference, and then I can start to see that there's a body there and some wicks right in there. So if I'm drawing like a red little box above it, how about right here? Right there. That's where I start my zone, with those two bodies. Okay, and then I bring it across, and you can see if it came right into that area of interest, back up, right into that box, back up. Yes, it did break down there, that's an impulse, but came right back up and closed above. Again, one more time. So you see 1, 2, 3, 4 rejections in here, and then could have bought up here. You see that there was multiple rejections. Read what the candlesticks are telling you. They're telling you a language. If I was trying to teach you guys Albanian, it's a language. Some of you guys would not understand it. But if we go over words and words and words, you guys could probably learn Albanian. If you taught me your language today with my Croatian buddies at Club Zagreb, we were down there. I know how to speak kako si dobro, all of these things. I can speak Croatian too. We were having conversations. They were teaching me words. They were teaching me a lot of the bad words, the swear words. You know, when Croatia missed a lot of good opportunities, or when Albania scored. I heard a lot of Croatian swear words I don't want to repeat on this call, but they probably heard when Croatia scored, they probably heard all the Albanians say a few bad words too that they learned, but that's how we learn languages, okay? So we're learning a language right now of candlesticks. They're talking to us. They're telling us something. So I've now established a zone, and now the volume is below. So I'm going to make that zone red, and I'm going to bring it forward. This might be an area of resistance now, or maybe develop into an area of supply for crude oil. And then it's right around $81.10 up to $81.30. So 20 points, but right in the middle is that 81.25, that key area that I'm focused on. So bring it now into tomorrow, into Friday, into next week, into next month. You've established a zone. So now, if the buyers are for real and they want to push crude, they need to get it back up here and close it above there. Then what I do is I flip that zone to support, just like here was support, 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 support there. But this big body candle that closed below flipped it red, made it an area of offers. So if we come back up green and close it above, I'm going to flip that zone green, flip it red to green, see if there's a wick rejection. Then maybe we're going to drive up to $82 right there to that yellow line. Maybe we'll go a little further up to the next yellow line. But there's also, I can dissect in here. I'm not going to do all that right now because we're nowhere near that zone. So right now I got to focus more on these immediate zones. So now when we opened, we came all the way up strong, but then got rejected there. A lot of offers, then they pushed it all the way right back down. So now a point of interest. I know there's gaps in the market. We cannot control gaps in the market. That's the way how markets open and close, and there's gaps, you know. So, but that's where we closed. I can see where they opened. So if I'm looking at a point of interest where we closed yesterday, I can place a yellow line exactly at yesterday's close. This is where you got to use a little bit of intuition now. You got to have your own method here, okay? Because everybody's different. I'm going to give you a couple options, and you choose which is best for you. We're all right if we place a point of interest at yesterday's close. Absolutely, everybody's right. For the traders that place the point of interest at today's gap down open, you guys are correct as well. I'm not going to debate you. I'm not going to waste time. You guys are correct too. But if to not have a debate, why don't we just go right in the middle? A little bit of this green candle, a little bit of that, go right in the middle, you know, to keep all parties happy. And then are we? Then I look at the number, $80.70. So we're five ticks away from that 80.75. So we keep everybody happy. If someone says, Ron, you should have put it at the close of yesterday, and then if someone says, Ron, you should have put it down at the gap of today's open, how about I say, I'll make everybody happy and I'll just put it right in the middle and we're all happy. And let's continue moving forward. And then to make everybody happy, let's make a zone from there to there. And then everybody is happy. Then we all sing and dance right there. Okay, I can make a zone there. And continue moving it forward. Is the volume below or above this zone right now? It's technically below. So now I've figured my next zone right there. It's a little tighter zone. It's just the gap in the market, but it's technically a zone. Okay, and then let's follow the daily crude volume. So we continue to come down, red, are almost into 50% of yesterday's daily volume. Did we hit 50%? The naked eye is telling me no, we didn't. Okay, but that's why we should have had a zone in there. And then where do we find a zone? You got to look to the left of the chart, unless you can identify exactly where is 50%. Okay, so $80.32 is our low of the day. Now zone, hey, there it is. There's the zone. You see, purple line, that's today's low, body to body. Guys, simple stuff right there. Because look, if everyone understands how I do this, you guys are on the way to the path of financial success. Was that complicated? What I just did there, let me know honestly. Was this complicated? YouTube, what's up? Is this complicated for you guys to do? Zoom, I know you guys got this. So I use the purple line. That's it. That's a real critical line. That's today's daily low, and then we got some bodies of structure to kind of give us a little bit of a zone, and then now start stretching it. There. Now I kind of grab 50%. That I can do this without sometimes looking at structure, because I smoke a joint. Open, close, half of it is like right around here. Give a little bit above and a little bit below. Remember that song we were gonna get remixed by 50 Cent? Little bit above, little bit below. Okay, so how would I do this if I didn't know what today's low of the day is? Good question. Okay, great question. Let's just hypothetically pretend that we didn't know today's low of the day. Okay, open, close, smoke a joint, half of it is probably right there. Agree with me or disagree? One, not so much, but does it work in all time frames? Yes, everything works. If we're talking about price action, if we're talking about the same language of price action, I can pretty much guarantee whatever we're talking about right now, 50% of a candle on a 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 2 hour, 4 hour, 6 hour, 8 hour, 10 hour, 12 hour, daily, weekly, monthly, yearly, decade, century. I don't give a shit. If you can know where half of it is, you're on your way. Okay. And I can confirm that. I scalp the markets probably more than anybody on this call, and I swing trade and I invest. And I can say with confidence that price action is very technical. Candlesticks all have the same characteristics. If you learn this language, we can all talk the same language together. Okay, so if I didn't know where today's low of the day was, pretend this red candle didn't even print. Okay, so now I want to talk hypothetical. If this red candle didn't even print, we can see yesterday's open and close. If you don't see any structure to the left of the chart, you can clearly, if you can't do it with the naked eye, use your Fibonacci tool. Put your Fibonacci right here from the open of the body and put your Fibonacci tool to the close of the body. It will tell you exactly where is 50%. Okay, if you want to do that, then there's no argument here. So, but sometimes I scalp fast on the 1 minutes. I don't have time to pull out the Fibonacci tool on every single 1 minute candle. So I've trained myself to look quickly at where half of the body is. Sometimes I've already identified it before the candle even closes. So open close, half of it's right around there. Then if you want to kind of give or take a little bit above, a little bit below, to like how much you want, 10 ticks above. So if it's 820, 827, let's go to 37. Okay, 10 ticks above, and then just go 10 ticks below, and then now you've established your zone, correct? So hypothetically, if we did this and we did this yesterday, because we do our analysis, we're good traders, we do our technicals before the day starts. Remember, guys, your trading plan, your journaling, continue that, don't neglect that stuff. Do your nice top-down analysis. Then when today came down red, we could have had our zone already established, and maybe we could have dropped down to the hourly or maybe to the 5 minutes, and we could have scalped that candle, that wick coming out of there. Okay, so that's how you can identify a zone if we don't have any analysis from the market. Okay, do you guys understand that? But we do have analysis from the market. So we had our low of the day. We do have these bodies right there. So there's my zone according to all of the structure that's been already built. Now someone's going to say, oh, Ron, this shit already happened. Oh my God, it already happened. That's easy. That's easy to identify. This happened right there and this happened today. Yes, I understand that. But I showed you hypothetically how to do it if this didn't happen. Now, let's, for conversation sake, so we don't say, oh, Ron, this, now bring it into the future. How about that? And then now you're preparing yourself. If in fact it does come back down in here, then that's maybe where it's going to bounce buy out of there. So if we come back down again, red, maybe again inside this green box, that's where maybe it might wick out of here. If we close below here, we flip it green to red, and then maybe it's going to sell back down to here. Okay, so you're starting to establish your zones. Again, we have an indecision candle on crude today. US banks are closed. They opened bullish, high of the day, came back down, low of the day, and now it's coming right back up with this red volume. Okay, so we still got to give the benefit of doubt. There is red volume there. Ace, damn, that mango flavored joint is good. What's your guys' best joint ever smoked? Oh, I don't want to get into that. Smoke some good stuff. Hydro from BC. Some good stuff. I use it for medication. Guys. It helps keep me. Some guys ask, Ron, how do you smoke? How do you trade? Okay, so off topic, guys. I know I get this question a lot. Some traders that come on YouTube are scared when I'm trading and I tell them I smoke. Guys, I've been smoking since I was 18 years old. Not cigarettes, but weed. I'm 42. So it's kind of medicine for me. You know, it keeps me relaxed. Scalping the markets on 1 minute is very stressful. It keeps me relaxed, keeps me focused, kind of slows down the market for me, so I'm concentrating on more important things. You know, I don't. It's not for everybody. I'm not going to say that. It's not for everybody. Some people react differently. They get paranoid and things like that. So obviously, you guys, if you smoke, you guys should know what strain you're smoking and what it's good for and this and that. I'm not a doctor on this, don't quote me. It is legal where we are in Canada, so please guys don't send the feds to my house. It's legal over here. I can go to the corner store and buy it if I want. So it's all good over here. But yes, I do smoke, so don't get scared if you're on the call. I can multitask and do a lot of things. Soon when I get my other room ready, might be outside, and then I'll smoke out there and trade with you guys. I got to get away from like outside the house where I don't have kids. Anyways, let's get back on topic here. Okay, so let's follow now this daily candle. Break it down 60 minutes, hourly. Can we get a like, guys? If you're learning a little bit, there's a lot of new viewers on the call. We appreciate you guys. Germany is I didn't even see. Germany and Hungary are on right now. Anybody catch score? I have it behind me, but it's a commercial right now. Did anybody catch the Germany score right now? Okay, let's look on the hourly. Okay, so remember now, Now we can see exactly when we tapped into the high of the day, the low of the day, we can start to see something. Gabriel, don't we trade live? Yeah, just right now I'm just doing a little analysis. The US banks are closed, but yes, we do come on here. We analyze the markets, we trade live, we tell you where we buy, where we sell, where we place stop loss, all of that. Just tune in and see what we do. If you like it, subscribe. If not, it's all good. But yes, we do trade live. Okay, we've been doing it for 5 years now on YouTube. So thank you guys to the growth of YouTube. Gold is moving, guys. Sorry, let's just take a look at gold. 1 second, guys. Okay, so gold. Okay, does anyone see kind of a double top on gold? I know it's after the fact. Shit, I should have been in this on the sell. But coming up, okay, barcoding, green, red, green, red. Look at 5 minutes make structure. Do you have a I'm going to ask you. I don't need to ask myself. I know what I do. Did anybody put a line around those bodies right up there? Okay, just to identify that there is a little bit of resistance up here. Okay, and then okay, let's do this together. Sorry guys, I'm on gold, but I get kind of off topic here. Okay, you locate the bodies, correct? I see an impulse, wicks. There should be a 5 minute red box right above there. Now you've kind of established your range on the 5 minutes. Okay, make it red. There's a clear double top I see up there. It came up, barcoded, consolidated, green, red. They brought it right back down. We established our neckline right there. There's the neckline established. See that big ignited green candle that came back up and tested again right up here. Equal highs, red box, double top. There's your red bar that closed below right here. You could have scalped this candle alone, just this bar right now with minimal to no drawdown coming down to the bottom. You can pip and dip out of that candle, that one red bar. It might close below here and then we flip that green to red and then continue to move back down into here. But if you're just trading this one single bar candle, and I know which scalpers do this, they're in a group. That's a low wick right there. That bar is 8 pips right now. It's going to close. Watch where it closes. It might close near the low in 10 seconds. Already, guys, where's 50% of this big bar? It's open, close. Where's half of it? Dissect it right now. Surgeon, put your right there. That's about half of it. So if it comes back, and it's a nice whole number, 2329.983, 2330. Ignited open. There's your ignited open. There's your pop a little bit. Will it come back up? If it does, see if the supply will hold below right here. There's your zone right there. Go to that wick and bring it right across. If we still stay below here, like if it pulls back up green, but it's still ignited, this might drop. But if it pulls back up, we got to give the benefit of doubt that the supply is still in the market there. Maybe it kind of comes down and then they drop it back down. But this could break down the way how this candle opened. It's a low wick, ignited open, lower low drop. Let's see if the higher time frame supply can continue to push us into the green box. But like right here, if you're selling, like I didn't take this, guys, I wasn't on it, but if I did, maybe I would have sold right there. Where would I have placed my stop loss? Well, look at structure, maybe right above those wicks, maybe right up to there, and then maybe your TP is to come down into maybe 50% of that green box to come in there. You get a little over 1-to-1 on your money. I see Aaron, yeah, I see it. Nice chart, Aaron. You got it there. We'll see if it tests down in here. But remember, these are green boxes. So it could just come right down in here. And then those pending buyers are waiting to take it right back up. So, but this actually closed below structure. So, and that's a second top rejection. And there it is. There's the drop. Again, if you're scalping single bars, that's an ignited open pop short wick drop. 50 Cent, please, if you're out there, we'd like a remix of that song. Pop and drop. Okay, guys, I'm not in that sell, but there it is. Yeah, Dave, shout outs to Dave. Dave took that sell, shout outs. But But do you guys understand that? Okay. So what we were talking about this entire call on the higher time frames, everything I tell you, locate 50%, understand the size of the wick, what the ignited open means. We just tapped now into that green box. Am I surprised that there's a little bit of a flick of a wick in there? I'm not surprised, but this candle now still has 2 minutes and 45 seconds to go. Anything can happen. It could flip, come back up and turn bullish and come and retest 50% here. If this heavy volume is still holding, we could continue to come down. This is where maybe you got to look at the higher time frame. The 15-minute bar is now breaking. The 15-minute candle is going to close in 2.5 minutes. Look at what it just tested into. 50% of the previous 15-minute bar at 11:45. The 15-minute time frame came down. Now if I'm looking at the 15s, it looks like this was leg 1 coming up. This is leg 2. Maybe in the next 15 minutes, we're going to see the next leg coming back up. If they drop it right there, then lower high, and then we continue to flush down. So like you pick your particular time frame that you trade, but also look at higher time frames. Like see how it was ignited and it came all the way down. So we broke this green box, but remember I had another green box, because if these pending buyers didn't save it here, maybe it's going to get saved in this box, in which it did so far. But we'll see in a minute 40. This is a hanging man candle. It's still got that ignited head with that red body. The sellers might continue to absorb these buyers and bring it down. But however, those buyers might be strong and flip this candle, and we come back up green and trade right back into there. So that green box, you know, the volume is below. Got to make it red for now. And then when I'm looking for like a potential buy, if I'm looking for a potential buy, I see how if I didn't buy this wick down here and I'm still waiting on the sidelines, I see if the buyers can bring it right back, close it above there, so that I can flip this red, 50% of that candle back to green, and then maybe I buy that move. And then my intention is to take it right back up to this previous high and maybe a breakout. Okay, and then I measure the zone before I even take that trade. If I'm taking it, I can see up to the red box, it's approximately 10, 11 pips. If it can break for a new higher high, maybe 15 pips. If it goes all the way up to the next hourly, we're talking 25 pips. See, now it flipped into a hammer. So you see how it came down red, red, red. But if you don't trust your green box, this is where sometimes you can get, you know, reversed in the market. But see that big rejection. So also determine when the candle closes. Sometimes it's hard to make a direct move when the candle hasn't closed yet. So I saw when this opened, it opened, came back up, back all the way back down. It flipped into a hammer candle. Then a big seller came in, absorbed them again. This might close with indecision, 50-50. You got sellers pushing it down, buyers are bringing it back up. Where will the volume close? If it in fact closes below here, we might continue to push back down. But look at the size of the rejection wick. There's the close. So now it's back in green. So I give the benefit of the doubt that this is still supply in the market. We still haven't really tested 50%, a little bit, but maybe we're going to come back up lower high. If they drop this again, we might flush, continue to move down red. Okay, so sorry guys, I got to go back to crude oil because I got to wrap up this call. I got a lot of errands to do today. Don't tell the wife I haven't started packing yet. Please guys, don't snitch on me, or else I'm going to get grounded. Okay, so what were we doing? Crude oil. Okay, so let's go back to crude. Let's go back to the hourly we were on. Okay, so we were over here. Let's finish our crude chart. Okay, so hourly now. When did we consolidate? Right here. Okay, so 2 a.m. we had some pre-London news. We see that it affects crude oil. It was red, came all the way down. Here's London market open, 3 a.m. Came back up to about 50% of that hourly candle, and then they rejected it back down. Came back down, back up, consolidation. Green, red, green. Then we start right here, 7 a.m., start to move. 8 a.m., look at closing above this previous high. If I was looking to place a white line in the market, this is a good area to place a white line. You get a lot of touches. Hourly resistance right here. There was kind of resistance right there, push down. right there. Tweezer top highs at that white line, $80.85. They pushed it right back down. We came in, we closed right near it, right there at 7 a.m. And then it opened red, 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 red. They came down, picked up the liquidity, and then there's your break and your pop. If I had a signal right there, and when it came down on the 5 minutes and it came all the way down, I see it pick up the liquidity, that could have been a quick little 5-minute or 1-minute scalp, taking it up for 10, 15 pips, pipping and dipping out of the market, if that's the way you trade. If not, you see it made a high, came back down red, came back up green. We tapped into our high of the day right there at 11 a.m. when we started the call, and then they started to bring it right back down. We closed below, so green, red, green, big flush down. There's the zone that we just figured out, that red box. So it came back up. Look at the hourly, previous hour, 12, noon, green, 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 just right below 50% of the hourly. But now if you want to adjust the red box to complement the hourly, I could bring it right up to that candle right up there, right to that body, and give myself more of an hourly area to get rejected and go on the emphasis of this big bar above me. So what I would do is to kind of clean up the charts. I made this red box too big, too far into the future. I'll adjust it on the 5s. Sorry, guys. Okay, so right now, and then look at, now it could be forming a second bottom on the hourly. Like, look, it came down, one bottom, came back up. There's our big neckline up there. But there's also this neckline, okay? But more importantly, that neckline. We came back down. Look, it's forming a higher low at 50% of that hourly candle at 5 a.m. Now we might be coming right back up, but how will it react if we get back up to this daily point of interest here? Will it come back up? Will they reject it back down? And then will it break through here? Okay, so now we got to focus on these last hourly candles right here. So there's hourly support, white line, right here. Again, this is the debate we can have. Do we place the white line, the hourly line, at the close of 12 p.m. and then I see the gap up? So you can go 50-50, but I'm going to keep it there because it also touches the wick. Okay, and then a little bit, 50% of this candle, open, close. There's about 50% of it, and now we're coming right back up. Okay, so it's strong right now, but overall, we do have this big bearish candle. We already tested into 50% of it, then they rejected it back down. Like, this is a clue right here. See how we closed as a shooting star candle right at the low? This should have opened, ignited red, and dropped. Okay, just I'm telling you facts. That the way how this momentum closed with that huge rejection, this candle, technically this hour, 1 p.m., should have opened red, ignited, and dropped and filled a little bit of this range. However, the market said otherwise. The market said, we're going to gap it up. Okay, look closely. Look closely. I didn't gap it up. You didn't gap it up. The market maker gapped it up. They gapped it up green and then pulled it back down and then kind of formed that equal low bottom. And then now it's coming up as a engulfing hourly candle, but there's still, it just opened. There's 54 minutes to go. Anything can happen. If this gets exhausted, if it comes back down, red, 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 and we break down here, this could be potentially an easy scalp right down to here. You know, I know it's not a big move, but just from here to drop down to this area, 44 to 38. I know it's only 6 pips, but that's micro scalping. But let's go for the move below the white line to come all the way down and test kind of the low of the day, the purple line down in here. Maybe it gets down there. But right now, let's go to the 5 minutes quickly. 5 minutes. Okay, so they're selling. Okay, we're continuing to make lower lows. There's the pullback, lower high. Continuing to push. There's that drop right there at 12:55. Here's 1 o'clock. They're bringing it right back up. Now, I'm just going to remove zones now, this big green box, to concentrate in here. The 5 minutes. Look here. Here's 5-minute resistance. If you cannot see this, you got confirmation also to the left of the chart that it in fact was support right there and came back up. Now, you see it's kind of still below 50% of this candle, barcoding, green, red, coming back up. So if I'm scalping like crude oil, I figured now a little zone from here to there. I measure it. If it's coming back up, closing above, or maybe it's building as like an impulse breakout and I take that trade, I could grab 10 pips, maybe up to there, maybe 10, 11, maybe 12, just to scalp back up there. But if I do, I have to know that I'm counter scalping the original sell move because it's pushing down. This was a counter move. Was nice if you scalp those candles, but then you got to kind of keep in mind that it's still pushing down. Then they pushed it down. Again, it came back up. We have no green volume closing above here. They pushed it back down to create a new low, that hourly low. Now they're bringing it right back up. This zone, if you don't want to trade in here, if this is a shitty zone, trap this area. This is where you trap, okay? And then you watch. You stay on the sidelines. This is where you can place alerts. You can have an alert up here if the volume gets up here. You can have an alert down here. Also keep in mind that there could be fake outs in the market too. What they could do is they bring it impulsively red down here, red candle, catches maybe a wick down there. It comes back up and closes above here, then retest this. And then that, if that in fact happened, then what I would do is I would maybe look to buy like right there, maybe place my stop loss below that liquidity low, or maybe down to the low of the day to protect myself. And then maybe I would look to take it back up to the red box, maybe break, and then take it up to that daily target and see what happens up there. If in fact it breaks like gold did yesterday, then yeah, then my target would be right there to those candle wicks, those tweezer top highs. If it can go up to the hourly white line, that's great. Then you can get more pips. But I'm looking for maybe a liquidity break, and then I buy that move. So right now it's coming right back up. Maybe we'll get rejected and pull back down. Start to locate now, maybe a zone. Do you see a 5-minute zone in here? See the open, close, pull back right down in here. If I'm looking at 50% of that green candle, I'm doing it now. So I don't tell, so someone doesn't say, Ron, you didn't do this after the fact. I'm doing it now. Look at what I'm doing. So see what I'm doing? I'm cutting that candle in half, 50%. Making it like a support. I got that wick, I got that wick, I got that wick, got 50% of that volume. So if it does pull back, if it does come back down red, I want to see our pending buyers waiting here at $80.50. Are they going to step in and take it back up and finish the move off like that? Okay, that might be a pullback buy in there. If it breaks here, then I'm looking for liquidity to be grabbed inside here. If you want to bring your box all the way down green like that, if you have to, you can, but I like to keep it real tight, because then if it comes in there and I see that wick reject right out of there, you can buy that wick, and then you've kind of nailed that trade right in there, okay? Can I show you a divergence move? Can I show you guys how to spot maybe divergence? Like I haven't even opened up RSI on this, on crude oil. I could be completely wrong and I'll look like an idiot on YouTube, but I want to show you guys maybe how to spot divergence before it happens, okay? Real quick, and then we'll confirm it with RSI. I might be completely wrong, but I do this on a daily basis, so sometimes I'm correct. See right up here where you have those type of bodies right there? Let me show you guys something. So if you kind of figured out your kind of zone right there and you brought that into the future, okay? Hypothetically, okay? Remember today's keyword is hypothetical, okay? Okay, so you see right there, that was structure. That was resistance. And then it go across. I know gold is going crazy. Gold is going crazy. I understand. But please pay attention to what I'm talking about right now, because you might see the same setup tomorrow on gold, and then you're going to make a lot of pips tomorrow on gold. If you guys don't care about this, no worries. I'll go to gold. No worries. Okay. No one wants to learn anything new today. Here's gold. Okay. See here? Guys, I got about 5 more minutes and then I got to take off. So we're right back now in the consolidated area. So we tapped right into that pending order right there. You see it tapped right in. We couldn't hold that one, but the next box held. Okay, the buyers were waiting in there. The depth of market stood its ground right there. It held. There's a tap and go. Look at the ignited bar. Now it's coming right back up to see, can we break out of this resistance up here? And then now again, zone flip. Is anyone fixing their zones, modifying their zones? The volume is above. So we got to go green. This big red one, it's not red anymore. The volume is above. Make it green. I got a lot of zones, I know, but I don't need to have this small one inside here. But I was showing from the red candle if it in fact got rejected there, which it didn't. So now we're right back in the consolidated zone. It could very well come back down, sell back down to in here. But maybe that's going to hold as the support going forward. So if you sold, nice little sell. That's why measuring the zones is so important, guys. Like, I cannot tell you the importance of this. If you measure down there, it's 15 pips, a nice solid number, 15 pips. Maybe you could have sold and got your pips out of there. If you didn't sell, then what I tell you guys is trade with the trend. Wait for the pullback that happened in here. It didn't. In fact, the buyers were not there. The sellers flushed it down to here. If you missed that wick, no problem. There's an inside bar. There's your ignited bar. You could have bought this, place your stop loss in the green box just below that low, and you could have caught that big candle. Now, if we pull back down, we're looking to continue to find our depth of market in here. Let me get off of this and go to gold on Bookmap over here. Okay. Yeah, so now like it's making a little bit of pattern. Up, down, neckline, coming right back up. Are we going to continue breaking out of here this afternoon? Retest this and we drive up to there, 23.32, 33, possibly. Or is this now, are we building the lower high second top? Right up here where we came up, back down, back up, maybe possibly back down. But now we're trading into green. You got to be careful shorting in here, unless maybe the sellers physically close it below right there, this structure. If it closes below, then you flip this green to red. That could be your pullback. Then we sell down into this green box. And then if you do that, measure the move. That's probably 15 to 20 pips down there. Then you got to respect this area. If the sellers can in fact break it down, then it will come down right into there. Then you have to respect the daily point of interest yellow line in this bigger green box. That's where the big pending orders are probably waiting in the market. Okay, guys. So I just want to go back and talk about that bearish divergence move on crude oil real quick. Okay, so just before I get off the call, I don't want to be rude and talk about this and not show you. Okay, so this what I was talking about. Sometimes you can spot bearish divergence before it happens. Right over here. Okay, so you see one top, right? Now with a top or a zone, stretch it across into the future. Now I see they broke up here, okay? And it was the high of the day, okay? So a lot of things happen at the high of the days and the low of the days. This is where you have to be extremely disciplined to understand that there could be, market makers are very smart. They like to grab a lot of liquidity at the high of the days and the low of the days and flip markets, okay? So right there, that was previous structure. I can see, yes, they did trade it above there, consolidate at the high of the day. But if we pin, okay, this, like right here, this high, this previous high to there. Okay, you see how the price action is moving, ascending. It's moving up. It's moving up in price. Over here, it was $81 exactly. 81 here. And then here it was $81.10. And then up here it was $81.12. You see how we're moving up in the price right towards the high of the day that was established? Okay, so now if you look at your RSI, and remember, I haven't looked at crude oil RSI. I could be completely wrong on this, but this is, sometimes it does play out. So then if you can kind of predict the bearish divergence move, and then if it closes below structure, that's possibly giving you the conviction to take the sell. Okay, let's look at RSI. Look at RSI at the exact point at the high of the day from this structure. Now connect the dots. Here it was right there. We were overbought right there. Exactly, if we time it perfectly with that move at 9 a.m., time in sales, 9 a.m., figure out market makers, how they move, how they engineer moves. They did bring it up there. Now, if we go down to the next peak, look at the divergence. So you tell me, how is the strength going down while the price is going up at the high of the day. Think like a market maker. Don't think like a retailer. They're coming up there to scoop up that last bit of liquidity, that pending orders up there, to trap that volume and then move the market, engineer it in opposite direction. So you see that the price is making higher highs at the high of the day. We were overbought, and then now you can see next time it came up, the strength is slowly decreasing. The strength is dying off, it's fizzling off, but the market makers are engineering the move to come back and grab that last bit of liquidity, okay? So this could now kind of signal right here where it came up, back down, came up, back down. There's the body that closed, and then drop. You know, I'm just saying hypothetically, if you're looking to take the sell, maybe hypothetically would have been right around there. You place your stop loss above the high of the day for protection, and then take it down, scalping down to the white line, maybe down to there, and that's it. And then you dip out of the market. You could maybe grab 20, 30 pips, but you can kind of identify the bearish divergence before it even happens. That's why I like to look at the RSI N9 EMA and 200 EMAs after I do all of my charting. Then I take a look at if this complements. But sometimes if I can see it before it happens, it kind of gives me the confidence that maybe that could be an option to trade up there. And then also, what did I want to talk about? So do you guys understand that? How maybe you can predict these type of moves before they happen. Okay, always understand structure and where you are in the day. Are you at the high of the day, the low of the day? Where are you? Okay, so they can, and then look at the time when it kind of engineered the move, 11 a.m. right when we started the call. That was a good sell setup. Okay, do you guys understand that? Does it make sense? Divergence. It's not always 100% accurate. Ron could have looked like a fool on that. If I was completely wrong, but I'm confident I've seen that play a million times. What is bullish divergence, Velen de Souza? Português? É caralho. What happened yesterday? Portugal, man, you were probably sweating yesterday against Czechia. Over here, okay, how do you spot bullish divergence? Let's go back to crude oil. I think I saw a little bit of bullish divergence developing as I was talking, right over here. So you see now, measure the low to the low at this hourly low. I know it's not the low of the day, like more of, or a yellow line, which is the daily point of interest. This is just more hourly. So the price dropped. From here, it was $80.50, and then we dropped down to $80.44. Okay, so it dropped. Price is dropping. Now look at your RSI. See, it's the strength is increasing from here, and then plot it. It's kind of like a trend line. See how the strength from here, and then when they made the next lower low right there, that was the liquidity grab, you know, and then see how the strength is increasing. Okay, so the strength is getting stronger while they drop the price down at a higher time frame area of significance. Hourly, I put more emphasis on the daily, the yellow line and the purple lines, the high and low of the day. But to me, that looks like a clear liquidity grab where they dropped it down, they gapped up that candle and closed it above. And then if you're looking for a quick little scalp buy, you know, sometimes scalpers are just looking to buy that individual candle right there. But you kind of had a clue that they were dropping the price down and strength is increasing. This move is not as strong as the bearish divergence one I was talking about, because that one was developed at the high of the day. So that one is place more emphasis on that one. This one is good, but this one is good for a quick little scalp. But if the strength continues to make higher lows and we break above this 50, then in fact, this is where I would possibly be looking to take maybe a continuation buy on crude oil. If we can continue to break and close above there, flip that, might be a buy to take it right back up to there, maybe break out a little bit more. Okay, so you asked for bullish divergence and I just spotted it right there. Okay, but the key thing is we can spot divergence all day. They're not 100% accurate. Put more emphasis on the divergence at the higher time frame plays. Put more emphasis if it's at a daily point of interest, if it's at a high of the day, low of the day. This is an hourly, but it could have gave a false signal. Okay, so but that's how you can spot it. If you're looking for like a buy or sell, just kind of double check your RSI. Do you guys see any divergence? It might help you. It's not 100% guaranteed. I just want to make that clear. Okay, guys. So everybody on YouTube, please, pinned at the top of the channel is this free Telegram channel. Please subscribe to it. We show everything we do in here. There was the sell Dave took on gold over here. Beautiful sell, Dave. Dave is grabbing some pancakes. We show everything we do here. Dave does in Wall Street. We got Shahab in London. Guys, please subscribe and hit the notifications. I can't say this enough. I am leaving this week for Europe for about 6-7 weeks. So I'm gonna, wherever I find some Wi-Fi, and when I settle in, I'm there. I don't know if I'm gonna have like a set schedule because I'm gonna be very busy. But if I have 90 minutes, 2 hours in a day, I don't know what time of the day. It might be early in the morning in Europe. I might have to swap some sessions with Shahab, and I might have to do some live London in Europe. I don't know. It all depends. I might do some late sessions. I have no idea because 6 hours time difference. But I'll figure it out. But if you're notified on YouTube, then you won't miss out. So please hit the notifications. Join our free Telegram here. We show everything we do with our Scalper Pro signals, everything that's going on in all of our other live sessions, promos, giveaways. These are our signals before and after. We show you. This was June 18th, gold buy for approximately 200 pips. If you leave runners, oil sell for 40, Dow sell for 60, gold buy for 30, another Dow sell for 100. You can add those pips up, guys, and you can see some do hit stop loss. That's trading, guys. You know, it's part of the game. Not every single signal is going to go directly to profit. That's trading. You guys know that. And so we appreciate, guys, if you join. I got to go run a lot of errands right now. I forgot to tell you guys, yesterday my wife hit the pothole. She not only damaged the tire. I thought it was just the tire damage. I took it into my cousin's shop. We took the tire off, and in fact, the entire rim is cracked. So I got to go now replace the entire rim. I have never seen a cracked rim, but the potholes. I thought the axle was done on her Benz, and I thought, oh shit, this is going to cost a lot of money to replace. But I got to go now and put a new rim on with a new tire and get that ready before we head out, guys. So tomorrow morning, same time, 11 a.m. Join us, guys. Enjoy the rest of the football games today. I didn't even see Germany is up 1-0 with 65th minute right now. And great game after at 3 p.m. Switzerland. They got a couple Albanians that play on there, Xhaka and Shaqiri on there. And so I'm cheering for Switzerland too, but I love Scotland too. I got a lot of Scottish friends. So go to the pub, guys. Enjoy some drinks. Have some fun. Enjoy the Euros. And I'll see you guys tomorrow. Thanks for joining. Shout outs to Lorenzo and his crew for joining us on YouTube. I appreciate you guys. Leave the link in the channel, guys, and then we'll come check you guys out. We'll leave the link. If someone can drop Lorenzo's link in here, we'll come in there and we'll support Lorenzo and everything he does for the trading community. Thank you, guys. But I'm out. Have a good day, guys. God bless. Take care, everyone. Enjoy the rest of the day, and we'll see you guys tomorrow. I'm happy we fixed the audio on YouTube. I apologize yesterday, guys. We had to reboot the entire OBS and install it again. I had some issues with it. And guys, Zoom, love you guys too. Have a good day. Have fun the rest of the day. If you guys hit some daily goals, walk away. Go enjoy the Euros. Go on with your day, and we'll see you guys tomorrow. Have a good day, guys. Stay blessed. Appreciate all of you guys. One love. See you guys.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.